Good morning. Welcome to the education room. Good morning, Cav. Good to see you. Welcome to the room. I see we get new people popping in and out, probably people from the funding company. I love that. I like when they sneak in. Just remember, and I don't know if I see anybody right now, this classroom is designed to teach you how to read the T3 indicators, guys. Nexgen Software Services, T3 indicators. We've been doing it for about 30 years. While this isn't a class to teach you how to trade your own methodology so that you can do well in the funding company, it conveniently provides you a plan that can be used in your endeavors. Before we really get going, guys, this is an educational room. It always has been. It always will be. I don't give trading advice. I don't ever suggest to tell you what you should do with your software or your day trading. What I do is I just talk about a couple advantages, teach you how to read indicators. That's my job. And I think one of the most important advantages you can start with is knowing what's going on in the wonderful world of news. Guys, today is FOMC Day, but before FOMC Day, it's crude oil inventories at 10:30 a.m. If you are a crude oil trader, guys, there's a good chance that there might be some silliness before as people jockey for position waiting for news, and that there could be a spike when the news is released. And that's really all checking news is, guys. It's saying to yourself at 2 p.m. when the federal funds rate comes out, it's high impact, which means if the market is behaving wonderfully, it has the possibility to no longer do that. It can create indecision in the market. It can create spikes in the market. And if we're being completely honest, even leading up to that announcement, you'll notice that there's a pretty big struggle, guys. And what's happening is the men and women with the money and the power and the ability to create trends are fighting one another as they wait for that news release. And we see this on FOMC a lot because if it's good news, they want to be in a position to make the most money when they dump money into the market. And if it's bad news, the same is true. So what you will probably find on FOMC Day is that the market, for lack of a better term, sucks a little bit for you. There's a lack of follow through. And you'll begin to notice it. And then you'll have to make the decision. Do I want to trade on a day when I know that there's this indecisive and lack of follow through? And only you can make that decision. I refuse to make it for you. The way this classroom runs is the same way it's run since I took it over, to be honest with you. We're learning to read charts, guys. That's it. We are going to use, regardless of which platform you're on, NinjaTrader or TradingView, we're going to use a checklist. You're going to use a checklist. There's no we in trading. I have already in the room, and I'm going to show you in case you missed it, in case you don't like to look up. There is a plan for my NinjaTrader users. There is a plan for my TradingView users. There are spreadsheets provided that show examples of the trades that are being taught. And there's also, where is it? There it is. There's also the PowerPoint that I used to teach this first hour. And guys, it really is. It's the first hour, same lesson, same verbiage, same rules. And those plans have 3 rules and 2 charts, guys. That's all it takes to bring them to life, to recognize advantages. And that's what we're going to do. Hey, what's going on, Sergio? You're going to learn to read your indicators. And you're going to do it with the dedicated purpose of recognizing advantages. And then you'll be able to turn those advantages into trades. Hey, good morning, Karis. How are you? Nice to see you in here. As chart reading is about 90% broke again, you need a better plan, Karis. About 90% of your day is doing nothing. 10% of your day is actively trading because your rules are met. And when I talk about these rules, guys, what I'm talking about is a pattern. And the market moves in patterns, and it has for as long as I've seen it. And you're going to understand through your chart reading some pretty simple concepts related to those patterns. You're going to understand where the market is likely to continue. You're going to understand where the market is likely to go. And you're going to understand where the market is likely to stop. These all are derivative of the 3 rules that you're going to learn to recognize these high probability trades. Where the market is likely to continue is going to be your way to enter, to have the least amount of risk, the highest success. Where the market is likely to go is going to help you with placing targets that make sense. Hey, good morning, motherfucker. Nice to see you. And then where the market is likely to stop is what we call a termination condition. And a termination condition is an area that could stop the market, to get into trend, that could halt forward progress. And you're going to know about them before you ever get to them. You're going to know about where the market is likely to go before it ever gets there. And you're going to know where the market is likely to continue before that area is ever reached. A minute before, motherfucker. 1 minute before the 2 o'clock FOMC call. And I'm not sure if you've traded FOMC before, and I don't know how gold reacts. I think you're a gold trader. But when you look at something like, no, you can. Trade away. Trade away if you want. I don't know how gold reacts to FOMC, but I can tell you that the NASDAQ and the S&P are struggling to find footing to create a trend. So I don't know exactly what your strategy is. Maybe it works great for this, but no, up until a minute before 2 p.m., man, you're good to go. 2 p.m. Eastern. One of the things that the market does, and it always has, is it goes up and down. Pretty cool, right? How easy is that? So a trend is established, and a trend is established. And there always seems to be a fight or two right in the middle of those trends. The trend trade methodology, what we're doing, card finally paid activation. I like it. Let's do it. Tradeovate is not. Oh, Tradeovate is down today? No, I traded with Tradeovate this morning. Got to get back to basics. Karis, let's do that. I was on Tradeovate this morning. No worries at all, motherfucker. Oh, bummer. I guess I got lucky. Guys, this fight in the middle of a trend, that's your highest probability trend trade. That is a trade, the way it's taught, that you can prove typically wins 70 to 80% of the time. And this trade incorporates those 3 concepts. Take care, man. Always good seeing you. First, it's defining a trend, whether the market is going up or down. You'll be able to do that easily. You will understand the lines on the chart that could stop a trend. That's your likely to stop area. And when you enter these perfect trades from the fight, those same lines behave as the areas where the market is likely to go. And then finally, the very peak of that fight in a downtrend, or the bottom of it in an uptrend, this becomes your entry for the highest probability trend trade ever. Oh, awesome. Thank you for that, motherfucker. So guys, if you're a Tradeovate user, you may experience some challenges this morning. I appreciate that. If you can wait for that fight, if you can embrace that 90%, guys, you can take a trade that you'll be able to prove. You'll be able to go back and study it, verify it, prove it, trust it, that it wins more than it loses. And that's really what an edge. I'm not sure what a liquidity sweep is, Sniffing Pills, and I like your name. That's funny. What is a liquidity sweep? Let's see. Liquidity sweep. One of the things about me, Sniffing Pills, I know we've never met. Beyond key support resistance to trigger clustered stop order, allowing them to enter exit large positions with minimal slippage. It sounds familiar, yeah. I've never used that term before. I hate to admit it, but I'm pretty illiterate outside of Nexgen stuff. That's an algo term, but it makes sense. So the market's in a run, right, up, and then they pull back, and then they run back up. So yeah, that sounds real familiar. And that's exactly what we do, I suppose. Cool. You just made me smarter. I appreciate that. Hopefully I can return the favor. So what we're gonna do, I am the eternal student, guys. I like it when you guys make me smarter. So what we're gonna do is we're gonna talk about NinjaTrader. Man, we got a lot of new stuff around here, Karis. Let me get through the rules and stuff, and then pop some questions in after the rules. We can chit chat about some of the stuff. I'd love to. And you can always reach out privately if you need to. You mentioned getting back to basics. Guys, I can't stress this enough. I would say 70 to 80% of the people that I work with come out of the gates fighting, doing great, following plans, kicking ass, taking names, and then they start breaking rules. They start making things complicated. They really start chasing the money and not the process. And guys, I see this every day. And I get emails from people almost 2 or 3 times a day that are like, "Man, Mark, I'm dying over here. What's going on?" Um, and I'm going to tell you right now, getting back to basics is where it's at. Moonwalk, it's good to see you in here. Welcome to the room. I saw your ticket this morning, and I hope somebody's reached out to you. If not, they will. So for you guys that are brand new, we will talk about both platforms. Make sure you know which platform you're using. And then the class is the same all the time. And I'm going to tell you guys right now, I promise you from the bottom of my heart, I will not keep secrets. I will not hold back. I'm not going to try to sell you more to make you a complete trader. I'm going to give you rules. So I'm going to give you rules. That's the first step. I'm literally going to hand you a plan that optimizes your chances of success, that you will be able to study the pattern, improve, win more than they lose, creating an edge, giving you an advantage each and every time you choose to enter the market. The first step in getting to where you want to be in this room, participate, post in the room for about 2 months, past profit. So sniffing pills, I'm gonna address this because as we get into the education, this is a big thing. About 94% of people that pursue futures trading fail, and they don't fail. Oh, right on, they've got you. They don't fail. Think of it as a diet. When you follow a diet, you lose weight, right? Calories in, burning calories, all that stuff. If you really sit and follow a diet works. When does a diet stop working? Well, when you no longer follow the very rigid path laid out before you. And that's kind of what day trading is. When you have a plan that you can prove wins more than it loses, guys, learn to stick to your plan. Learn to stick to your guns on that thing that's bringing you success. But we are ego-driven animals, and we want it all, and we want every bit of it. And most people, that's it. Boredom is a killer. Impatience is a killer. Guys, the plan I'm going to give you is rock freaking solid. Learn the basics, learn how to do it. But as you learn it, post in my room. So if you're new in here, guys, get Snagit, get Snippet Tool, and get in the habit of posting in the room, just like Pete did just a second ago. And every time you post in my room, I'm going to look at what you have. And you're going to tell me what you saw. Hey, Mark, check it out. This is a strong trending market. My trigger lines have that railroad look. My path is clear. So I took a little move right off of Fibonacci support where the market is likely to continue. And I made some money on that trade. And now I'm going to sit on my hands and wait for the next trade. And if there's anything going on in this trade where I can go, hey, Pete, did you notice XYZ? Hey, Pete, maybe a little better since you don't have the best momentum. Let that fib create the bounce. Have a little less risk. Get a little more profits out of this one. And Pete will be like, oh shit, I didn't see that. Thanks, Mark. Thanks for taking the time to look at my post to give me feedback on what you see and how I read my indicators. And when you recognized a way to reduce risk and maybe make a little more money, thanks for sending that over. Guys, that's what we do. And if you don't post in the room, I can't do that for you. The goal is that you practice the correct rules because once again, broken record, your rules describe a pattern that can be proven to win more than they lose. The second thing is keep it simple. We all know KISS, right? Keep it simple, sunshine. That's the plan that I give you. It's called the KISS plan. And it's called the KISS plan because it has the fewest moving parts. Guys, I am as right-brained as they come. If you are in tech, you are not. You need to make everything complicated, right? If you're in medicine, you're probably really good with if then. There's procedure for everything. Guys, I am a day freaking dreamer. So I created these plans along with John Novak to pull out all of the noise, to keep you focused on the best of the best. I'm wound up this morning. And this KISS plan is a stepping stone in your learning journey, which means it's not the only way to use the software. Guys, it is a minute fraction of the ways that the software can be utilized. But the trades in the plan are designed to optimize your chances of success. To make sure that when you enter a trade, it is a kick-ass trade. Pardon my French. You will craft a plan tailored to your personal goals based on your experience reading the indicators. So my job is to teach you to read the indicators, to recognize advantages, to turn those advantages into trades, and then your job will be to learn those patterns so that from that really solid foundation that we build together, you can begin to find more, you can catch more, you can do more. And I'm going to tell you, I'm going to put the disclaimer in there right now. If you are experiencing success and your success goes away, I want you to look at how well you're following the rules, because 9 out of 10 times, dollars to donuts, you have suddenly abandoned what's bringing you success because you want more and you're finding everything but the success you desire. Oops, I'm going to back up one more. So learning the patterns, we've all been there. Karis, we've all been there. Anyone that says they haven't had a struggle is probably not telling full truths. I also gave you guys this for both platforms, and it's just a spreadsheet. So this is NinjaTrader. Stumbled over my words. The advantages that I'm about to teach you, the first tab has them 100%. What it looks like, annotated, visual, talking about why. And there's over 50 pictures like that, making sure that you can learn the rules individually so that you can piece them together as a full pattern. Here's about 450 pictures of Nexgen users who have posted in my room and said, hey, Mark, I love that pattern that you taught. Here's an example of me kicking ass and taking names with it. And when it's rules met, guys, and look, there's the checklist that I provide. When it's rules met, I steal it and I turn it into a study tool for all you new kids. Also in here, if you're a NASDAQ trader, guys, there's some of my own failures that I've turned into lessons with NASDAQ. There is the KISS plan management, how to do something with those great entries, even patterns that repeat themselves that'll begin to pay dividends as you get outside of that very basic. And TradingView, it's the same thing, guys. It is trend trade, momentum trade, management, reasons not to trade, a place to put your pictures, and both of them have trade tracking sheets. So post lots, take 1,000,000 pictures, guys. Take so many pictures you feel like you're taking too many pictures, and get them into the room. So we're going to start with NinjaTrader. If you're not a NinjaTrader user, this isn't for you. If you're one of my funding company people who are like, man, I just want to pass that stupid evaluation, I want you to pay attention when I get to TradingView, because what I teach has been used by people in this room to pass those evaluations. And it's very, very simple. But NinjaTrader first, guys. 3 rules. That's it. As promised, as advertised. When a rule is true, when my large chart has strong trigger lines, I have the advantage of momentum. Momentum is difficult to stop. Momentum pushes a market. Momentum is a driving force. That's going to start us off. And if we have rule number 1 met, then we'll go to rule number 2, and we'll make sure that there's no areas in the way that could stop the market. We're going to be sure that there's room to profit targets, and we're just going to call it a clear path. Now, when you learn momentum and path on NinjaTrader, you have the keys to the kingdom, the golden goose, if you will. Because with momentum and path, that's when you're going to start to see more and more. Understanding what a termination condition is sets you up to go the other way. There's trades associated with that. So learn these very basic concepts. Your third rule is nothing more than an entry rule designed to put you in the market right where the market is most likely to continue with the underlying trend. On NinjaTrader, it takes 2 charts to prove these rules true. So, Karis, as we get back to basics, it's important that you know where the rules are met. We have a large chart first. This is where everything begins. And this large chart is very slow moving. It's a broad stroke of a brush. It's painting the living room walls with a giant roller before you ever look at the light switches, guys. It takes the most current bar, and that is it, the first bar. You will be able to define the direction of the market. You will be able to define the momentum in the market. And you will be able to define the areas that could ruin your good time. Rules 1 and 2 are met on the large chart before we ever turn our attention to the small chart. I think Cab said that this morning. He won't even look at a small chart until the large chart says go. When it says go, the market is way down here where I'm swirling my little laser pointer. This is where the fight starts. And you see it on the small chart. This is a refinement chart. You will see the inner workings of that one bar that gave you 66% of the good stuff. You will see the fight. It's called a retracement. It's a small push up when everything over here says down. You will see precisely where that retracement is most likely to go and fail, and you'll be able to use that spot for entry. And by using this refinement chart, it's going to reduce risk dramatically. It's also going to get you in at the furthest away point from your profit targets, where the market is most likely to go. You will literally learn to pinpoint where the top of this tail is most likely to form on a large chart using the entry verbiage from rule number 3 on the small chart, guys. 3 rules and 2 charts. Now, regardless of which platform you're on, there are 2 forces at work in the market, and they are both stronger than you. There is the large crowd, buyers or sellers. These are the men and women with the power to create trends. These are the men and women with the money and the influence to create that momentum. And these are the same people that react at areas and make decisions right at those key areas that you're going to know about long before you get to them. The large crowd wins. Now, the small crowd, these are your ne'er-do-wellers. These are your cigarette smoking, leather jacket wearing, motorcycle riding hoodlums. And they create the push, the fight. That little push down when the large crowd wants to go up. Guys, rule number 3 will have you pinpointing right where their failure is most imminent. And this becomes your entry for the highest probability trend trade. This becomes the trade, the pattern that typically wins 70 to 80% of the time. So we're going to use the T3 indicators to recognize this pattern. The first indicators I'm going to share with you are areas. And guys, you're probably going to get amused if you're new in here. I really do. I talk like a 3rd grader when I teach this stuff sometimes. Areas are lines on a chart. Areas are bouncy. That's the easiest way to remember it. If you see a line on a chart, it's bouncy. It can create a bounce, a ricochet. It's like a tennis ball against a brick wall. Moonwalk, I got you. And I've been married to a nurse for 30 years. I know how you guys think. We can do this. Areas have names. Divergence highs, divergence lows. So anytime you hear divergence in my room, I want you to instantly say there was a loss of momentum right where that line got drawn. The sellers lost steam right where that line got drawn. Guys, it's precise, and you're going to see it, and it all runs in the background and gives you a pretty line. You're going to see resistance. This is Fibonacci resistance, Fibonacci support, yellow 1-to-1s. Now, they do all have names, but let's simplify. If the market is trending up and it hits a divergence high, red Fibonacci resistance, or even yellow 1-to-1s, the market has reached an area of resistance. It's like a ceiling. And if the market is trending down, whether it hits Fibonacci support, a divergence low, or a yellow 1-to-1, the market has reached an area of support. It's like a floor. So we're going to use areas, resistance and support, to define where the market is likely to stop, where the market is likely to go, and even where the market is likely to continue. But we can't do it without these bad boys. These are trigger lines. Or maybe bad girls. I don't know. I don't want to assume pronouns, right? There are small triggers, two solid lines working together, doing their job. They're a fast-moving average. There are large triggers, two dashed lines working together to create those large triggers. They're a slow-moving average. When they're green, they're up. When they're red, they're down. Guys, we're going to use trigger lines to be 100% positive. We have the advantage of momentum. We're going to use trigger lines and compare them to those bouncy lines to make sure we're not trading into an area that could stop a trend. And we're going to use these large trigger lines, these big slow moving averages, to pinpoint that entry that is no less than 32 flavors of kick-ass, guys. And we're going to do it with only 3 rules. Mark, that's impossible. It's not. Stay tuned, it gets good. Rule number 1 says the large chart, the big chart, the slow chart, the large crowd. I don't care how you say it, but the people in charge must provide you strong trigger lines. That's going to give us the advantage of momentum. So strong trigger lines. Let's draw some pictures today, guys. I'm feeling wound up. Let's start with trend. A green background behind the first bar on the large chart means you're in an uptrend. Your path of least resistance is to only look for rules to be met for high probability trend trades long. If it's red, only looking for rules to be met for high probability trend trade short. Now the strong trigger look, and remember it's the first bar, so I could do this right here. Bonk. If my small triggers in an uptrend are green, just like the background, and my large triggers in an uptrend are green, just like the background, strong triggers means that my small triggers have broken above and away from the large triggers. And the large triggers must be wide. Think of a shark about to breach. And it's the space in between those triggers that lets me know that the odds are favorable for the market to continue up. So whether it's a little bit of space or whether it's a lot of space, if the first bar on your large chart has separation between the small and large, you have strong triggers. And when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. You're going to see that written on charts in this room all day long. Odds favorable momentum pushes a trend. Odds favorable momentum can break key areas, and odds favorable momentum will even cover some of the mistakes that we tend to make as new users. In a downtrend, it's no different. The colors all match. That's important. When the small triggers break below the large triggers, when the large triggers begin to get wide and angled down, it's that space. And it doesn't matter if it's a little bit of a space or a lot of space. If you see it on the first bar, that's strong triggers. And those strong triggers are no different than those strong triggers. There's not different levels of strong. Let it be either strong triggers where the odds are favorable or absolutely no space, weak triggers. And when you have weak triggers, which is very conveniently the opposite of strong, anything could happen up or down. That's when you start to see weird retracements from the middle of nowhere. That's where key Fibonacci areas are more likely to hold without that separation. With strength, they're more likely to break. And then guys, what's with all these areas? Remember when I said areas are bouncy? Holy crap, they really are. So what we're going to do is first I'm going to ask, are you guys cool? So that train track look, Karis, means that you are in a strong trending market. And that train track look is the only time separation isn't mandatory. Well, there's none here. Well, right there. Yep. But that's advanced. We're going back to basics. It's either strength or weakness. How's that? It's either separation or no separation. But Karis, what you've just done, and watch this. You're gonna hate this, or you're gonna love this. You said this look kills you. Are you ready for the most important message I can give in this room? You don't have to take a trade with that look. Stop doing it if it kills you. Stop touching hot stoves. You know you lose more than you win with that look. Why do you keep taking it? Because what if the market stops trading today and I never get a chance to make money again? That's the fear of missing out. So if you're getting back to basics, let there be separation and look for rule number 2, or let there be no separation, even with train tracks, Karis, and sit on your hands and wait for the large crowd to give you what you demand to find your trade. Everybody good with momentum? It's a pretty easy lesson. It has nothing to do with areas. It doesn't even have anything to do with price bars. It's just separation between the triggers. Now, termination conditions will take a little more mind. A termination condition is clinically labeled as a Fibonacci-based indicator that could stop the market, that could create a reverse, that may produce an untradeable bounce, or, to be honest, it could break eventually. Hey, good morning, Gary. No, I haven't. Jump in with Jason, see what's going on. I do know that Trade Evade is having problems today. Someone mentioned that. That could have something to do with it. Guys, a termination condition is going to be a bouncy line on your big chart. You're welcome. It's good to see you, man. I was wondering about you yesterday. True story. So it's weird that you popped in today. When price reaches a bouncy line going up, it reaches resistance. Price bars reach resistance. That's the first step in defining a termination condition. Or in a downtrend, those price bars reach an area of support. That's the first step, guys. Price has got to reach the area. If it doesn't, that area is a target. It has nothing to do with anything in the world. Price reaching the area is what sets off the decision-making process from the large crowd. So once price gets there, I'm done. I've used price for everything I need it to do. So my job is to say, where are the triggers? Where are those small and large triggers? And if all 4 of the trigger lines remain below the area of resistance, that area is a textbook termination condition. That area could do one of 3 things. It could reverse the market completely, making it a strong top, setting you up for the best of the best trade the other direction. It could create an untradeable bounce, which means that if I went long right here feeling cocky, they're going to stop me out, take my money, and then run up anyway and piss me off. Or they could break. It could just like it didn't even exist. And the reality is, guys, you'll never know what the reaction's going to be. They don't send out a memo. There's no way to predict it. It's up to the people that are in charge. So if price reaches an area, where are my triggers? My triggers remain below. My triggers remain above. Rule number 2 is not met. Absolutely no trades into the area. Is that easy enough? If you learn this phrase right here, right there, price reaches, where are my triggers? If the answer is the goose egg, right? The zero, the nada, the nuh-uh, nothing through. Guess what? Just don't trade into the area. Wait for the reaction. See what happens. If you're following the KISS plan, that's what the KISS plan tells you what to do. Now, areas do break very often. We'd be range bound forever if they didn't. When an area breaks, it's going to look like this. So sellers are in control. Price is cruising down. Momentum is awesome. Life is good. And price comes in contact with an area of support. The moment this happens, 32 people in an angelic chorus sing out loud, where are my triggers? And if all 4 trigger lines, both small, both large, remain above support, support's a termination condition. Support could create a bounce, a reversal. It could break. Hell, I don't know. My job is to wait and see what the reaction is. If it's going to break, it will be the trigger lines, not price. The trigger lines will tell the story. You're going to learn to count trigger lines. If 2 trigger lines blast through support with all that momentum and 2 trigger lines remain above, 50% are through, 50% are not. We call this a 50-50 look. Pretty cool, right? And what it tells me is that that area has the potential to break because of that momentum. It's not broken yet. This is the second trade on the plan that I gave you. that is so important that you understand the difference between a termination condition where no triggers have broken and a clear path when all 4 triggers get below the area of support and support is broken. This potential to break look is probably going to be the most common trade in your plan. 3 of the 4 trigger lines creates an advantage. It says it right in the plan. You have a checklist for entry and a way to manage it. But you've got to know that no triggers, it's better to sit on your hands. 4 triggers through, all 4 lines below support, has nothing to do with the color of the fib, has nothing to do with the price bars. 4 trigger lines below support, turn support into resistance. Your path is clear. Your path will remain clear until you reach the next area, at which point you'll go right back to number 1. So let's see what we have. Karis, there's that damn train track look, right? Weak triggers for the new user, big ugly retracement from the middle of nowhere. And then price reaches a divergence high and the triggers can't break. And it's not a coincidence that that's where the top came in. That's where the market started pushing down. Now watch how this works. 4 trigger lines get below that area of support. Look what the market does. It pulls right back to it, behaves as resistance, kick ass, right? And then it continues down. And it's able to shove through those areas of support, but it goes head first into yellow 1-to-1s and none of the triggers break. And there is your big untradeable bounce. One of the things you guys will notice about these yellow 1-to-1s is that they tend to catch fib overrun. It's pretty cool. They come down, they retest support, another big untradeable bounce, and then they get the steam to break all the way down to support, and they're like, well, none of the triggers broke, I guess we have to go up. And they go up, and they're like, well, hell, there's a lot of resistance here. None of the triggers broke, let's go down, and sure enough they do, directly to Fibonacci support, damn near to the tick, and now I've got momentum on the most current bar, but I'm trading directly into termination conditions, guys. So we just took both lessons full circle. Strong triggers, rule number 1 met. No triggers through the area, I'm going to sit on my hands. Probably wasn't any, Karis. Do you remember when I told you with all the love in my heart that 90% of your day would be sitting on your hands doing nothing? Not fabricating trades, but just doing nothing because there's nothing to do. FOMC is an absolute son of a gun. And that's what we're seeing right now. So if you're brand new with me, learn to count triggers. This will change the way you look at your charts. If price reaches a line and all 4 trigger lines are below, 0 triggers through, it's a big red goose egg. Man, my path isn't clear. It could stop the market. It could create a bounce. It could mess everything up. Why do I want to trade into that area? Because guys, this is from the day before Thanksgiving. 36 instances where rule number 2 kept you out of a loser. 36 instances, and they will break about 20 to 30% of the time. You've got to focus on what the bigger pattern is. And the bigger pattern says don't trade into lines because you're more likely to lose. With 2 triggers through, a lot of you will grow into this one. Mark, I don't want to wait for 3 triggers. I'm going to take it with 2 triggers because, damn it, I don't want to wait. Right, Nathan? And you're going to lose most of those because that's not your best look. So it's still a red with 2 triggers through. That's what the KISS plan tells you. When 3 of the 4 trigger lines make it above resistance, with that momentum, this is your best look for a breakout, guys. This is your highest chance of success, but it's not a clear path yet. So it's yellow, it's caution. And then finally, when 4 triggers get through, the path is clear. Can you guys give me a why in the room if you're new with me? This is the one. This is the most broken rule. I will see more losers in a day presented in this room trading directly into areas than I will with a clear path. Moonwalk, which platform are you looking at? Are you a TradingView user or a NinjaTrader user? I don't want to confuse you because I do go over 2 platforms, and right now we're on NinjaTrader. Okay, you have both. Cool. Whichever you want. Rock on. This is 90% of your day, my friends. There will be times when your path is not clear because of stacked areas. That's happening a lot today, guys. Kara said it. Mark, I don't see a lot of trades there. There's not. 90% of your day. But guys, it's 9:30 in the morning. You'll have support after support after support, or resistance after resistance after resistance, or no momentum. And that's okay. And you're going to learn that it is okay, because what happens is you do just a little Google search and you say, hey, guess what? The futures markets collectively trade $220 billion hourly. How much do you suppose it takes to find a six-figure income with your day trading, people? Some of you know the answer. Don't spoil it for the new kids. This blew my mind when I did the math. There's 252 trading days in the average year. 252 trading days in the average year, guys. If you can find a way to consistently average $400 a day, that's a six-figure income. $400 a day, and I'm going to say it, and I'm going to say it as a cocky mofo. If you can't follow a simple plan and find $400 to $500 a day, you're not following a simple plan. So it's okay. You don't have to be in every move. You don't have to be the first one in. You don't have to be the last one in. Rob, are you asking the contract? We're in March of 26 in the S&P. Guys, look at that. You wanted to go long with all that momentum, didn't you? Admit it. But rule number 2 said no. There could be an untradeable bounce coming. Rule number 2 says just relax. Something's going to work out. Just not yet, guys. Just not yet. So rule number 2 is going to be your patience piece. So I'm going to ask, is everybody cool so far? Rule number 1, let me find my big crowd, little crowd picture. Rule number 1 has given us the advantage of momentum, a market that's going to be very difficult to stop, a market that has the capacity to break key areas, a market that can cover mistakes, a market that is created by the people in charge. And rule number 2 has said there is nothing in your way. There's no reason for that market to bounce. There's no areas of resistance. We are screaming north, and our path is clear. Is everybody good with that? If you don't have this look, this rule doesn't work as well as we want it to. And let me get you Enova. We're about to go pinpoint where the small crowd is most likely to fail. But first, I want to talk about Karis's question. Mark, is the midband like a fib? The midband is not like a fib. The midband is actually a moving average, Karis. And let me do this real quick. I don't know if you guys know this, but 90% of men don't read instructions and 50% of women who trade don't read instructions. So I take you to the instructions. Just a little, so you know where to find it to back up. Your midband, there it is only a termination condition. The midband is only classified as rule number 2 not met if the large triggers, remember large chart, are a full bar away. And we call this the gap theory. And just because I know that it takes a little study, I've put like 75 pictures of the gap theory into your spreadsheet that I gave you. So Karis, the only time your midband is a termination condition is if price reaches it, and then we're done with price, and the large triggers remain above the reversal bar marker, letting you know that a full bar can be formed before it hits those triggers. So up or down. Does that make sense? And then if you need to study it, there's so many pictures in here. Price reaches really any area. If the large triggers are above the reversal bar marker, it's more likely to suck back and close that gap to the large triggers than it is to just continue down. We're about to use that sucking back to the large triggers concept to define the perfect entry, guys. And that's what rule number 3 is for. Rule number 3 is an entry rule. Rule number 3 is designed to get you into the market where the market is most likely to continue with the advantages of rule 1 and 2. And now I'm going to go back to it. I'm a language nerd. And if you learn the language, If you learn the language, guys, this becomes very easy. So before we do the entry language, if you're looking at trigger lines and you remember this phrase, dun, 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 and I'm probably going to misspell it. Separation is strength. That's not so hard, right? Separation is strength. That's it. That's the only phrase that you have to learn to be able to define strong triggers. Separation is strength. Price reaches resistance. Where are my triggers? None break. That's it. Remember this phrase. It's going to set you up to never make a mistake on termination conditions. Well, this one's a little more wordier, but it pays huge dividends. I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. That's the phrase you need to print out, put on your desktop, commit to memory. This limit order, good morning, Wayne. The limit order means that you are so confident in calling your shot that you'll be able to wait for the market to come to you. Buy or sell a pullback, that little push against the large chart trend, it's going to start with a reversal bar. You're going to do it at an area. Please learn this list, guys. Fibonacci support or resistance, yellow 1-to-1s, or a mid band. If you see another line on your small chart, it is not an area for entry. And that area has to be inside of triggers. 10K, apparently there's a trade of 8 problem. We've had it mentioned a couple times in the room now. There's a lot of people with stuck charts. And I'm going to tell you guys right now, what a blessing to have stuck charts on FOMC day. So I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. This is your entry pattern. And this is defining where that little fight is most likely to be lost. It's a sign, right, Jen? This is the trading gods looking out for you. So guys, when everything says up, large chart is in an uptrend. Large chart has odds favorable momentum. Large chart has no termination conditions. Guys, it's terrifying to watch that because you're watching a market run away from you and your guts start twisting and your palms start sweating and your heart stops beating and you're just like, oh, I'm never going to get paid. And then the small crowd shows up and the reversal bar begins the pullback. Guys, this is the pattern. The reversal bar is not your entry. The reversal bar is a small loss of momentum that's going to get you back to your entry. Once the reversal bar prints, and with a little bit of study long before it prints, you're going to say to yourself, price returns to large triggers. And on your entry chart, you have 2 sets. You have smooth and stepped. The smooth large triggers are native to that 5-1, that small chart. They belong there. They originate there. Those are the triggers where if your rules say you need strong triggers on a small chart, you'll do the comparison. Now the step triggers, not my real triggers, these are from the large chart. It's just the large chart, large triggers. I mentioned these are moving averages, not to sound smart because I am the most illiterate math guy in the world, but there's this concept called regression of the mean, which means that that price is most likely to retrace somewhere in those large triggers. So we're going to use those large triggers to define the retracement zone. But triggers aren't bouncy. What's bouncy? Somebody post it in the room. Does anybody listen to me? What's bouncy? I love saying bouncy. Midband is bouncy, right? Areas are bouncy. So Karis, let's not limit ourselves to midbands. Let's get into that word. Areas are bouncy. Midbands are bouncy. Yellow 1-to-1s are bouncy. Fibonacci is bouncy. But they have to be inside of that retracement zone to define your entry. So when the reversal bar prints, I say with confidence that retracement is most likely to go somewhere from the bottom or the top of these lines. And then, so, all right, Karis, let's do it again. You ready? The smooth ones are from the 5-1. The highest point of those triggers is the top of the retracement zone. These happen to be the synthetic from the large chart. The lowest point of the triggers is the bottom of the retracement zone. And I don't care if it's large above synthetic, synthetic above large, it doesn't matter. These trigger lines define where the market is most likely to retrace. Don't overthink it. There's a concept, if you really want like the best of the best, wait on what we call favorable large triggers. Favorable large triggers means that the large chart and small chart large triggers are one on top of each other, like two snakes riding piggyback. And when you have that, you have the smallest retracement zone, which means that you have the least amount of space to shoehorn some areas, which means you have the highest level of accuracy as you define your entry. Guys, this is the best of the best. It doesn't always happen. Very often, and I think I have a picture of it because I like pictures. Sometimes you'll get what we call split triggers. And all it means is that the market could retrace somewhere from the top of this trigger line all the way down to the bottom of the trigger line, which makes a much larger range, which is actually going to increase risk a little bit and reduce accuracy. So there's a best look, and then there's probably the most common look. And that would be a pretty big stop. But if you learn this pattern, and more importantly, if you learn the whys, why is this pattern so important? Because when the reversal bar prints, I can pinpoint where the retracement is most likely to go. I can identify without hesitation or question that the areas within the range, the retracement range, are most likely to create the desired bounce to continue in the direction of the trend. So I've defined retracement zone. I've defined it likely to continue. You'll actually develop the courage to activate a limit order about 2 ticks above that highest point of support. Not because it's a mid-band, just because it's closest to the reversal bar. And if you guys remember, the large chart is absolutely railing north with nothing in the way. This is to help you avoid tripping over a couple pennies to save a few dollars. But the way the methodology works, because I go through the whys. Why do we use the triggers? Because it defines the retracement. So if we're being completely honest, as long as price stays above that bottom line, rule number 3 is in play, guys. You still have the edge, the advantage of that entry rule. And the cool thing is because you know where the market's most likely to retrace, because you understand where it's most likely to bounce, you have defined where the market should not go. In a long trade, the market shouldn't make it 4 or 5 ticks below those trigger lines if this is going to be one of those winners. And what that means is that absolutely no entries per the KISS plan are taken from below the trigger lines, because once it gets there, I don't know if, when, or where that market is going to continue up. And what this does is it allows me to have the least amount of risk possible. And what it also does is it reminds me that anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time, which means I am making my losses smaller with smart stop placement. And because it's futures, we eat from both sides of the buffet, guys. When your large chart says that the trend is down and you're making choices to go down with it, you're going to make sure that the large chart has strong triggers, providing you the advantage where the odds are favorable for it to continue down. You're also going to be sure that the large chart has nothing in the way, no areas reached. And then all you have to do is say, come on, small crowd, give me the reversal bar, start the retracement. A lot of you are going to crap your pants and jump in early. I'm going to tell you right, there may not be pants crapping, but a lot of you are going to jump in, fearful that the market is going without you. I'm going to tell you, a little safeguard, if you do that and it doesn't just keep running, this reversal bar is an awesome exit condition because you've lost the momentum you need. Once the reversal bar prints, you're going to look, where are my triggers? Well, there they are. That's where the market's most likely to retrace. But triggers aren't bouncy. I need a fib. I need a mid-band. I need a yellow 1-to-1. Learn that list. And it has to be inside, all caps, of those triggers. Guys, this is a magical moment. There is one line inside of triggers. Your limit order goes 2 ticks below it. You sit on your hands, you put them on your head, you pet the cat, and you say, come on, small crowd, come get me. Sometimes they won't. Don't panic. They know where it's at the same way you do. And very often they come back. And this is where the market is most likely to continue in the direction of the trend. Because the methodology allows you to define the retracement zone, the bounce point, you know exactly where the market should not go. And that is 4 to 5 ticks beyond those triggers. That's where the KISS plan tells you to put your initial stop. So what this methodology is doing for you, what this very basic approach is doing for you, is it's giving you the ability to look at your charts and say out loud, that market's going to be tough to stop. And it's giving you the ability to look at your chart and say, holy crap, those areas could stop my forward progress, or even better, I've got tons of room before I hit those areas. And it's allowing you to look at your chart and say, I know exactly where the market is most likely to continue in the direction of that trend. I know exactly where my stop goes. And here's the cool thing in the KISS plan. If I'm in a short trade from the area inside of triggers and I get a reversal bar down, my new stop is 2 ticks above that bar. And it's not uncommon to see you guys with $30 or $40 worth of risk on an amazing trade. And even if it loses, who cares? It's 30 or 40 bucks in the futures market. Same in that uptrend. And everything that we've talked about is a repeatable pattern. This is the best part. So when I have momentum, let's do it like a flow chart. If I have momentum, then I'll make sure that I'm not trading into a termination condition, which means that if price reaches this pink line, I have to wait for at least 2 triggers to be above to give me the potential to break. And when this happens, the market is trading all the way up here, which means your gut response is, damn it, I don't have any room to make money. Look at how close I am to those 1-to-1s. This stinks. I hate Mark. I hope he stubs his toe. And then you go, no, wait a minute. I'm not entering at the top of the move. I'm waiting for the pullback to the area inside of triggers. And all of a sudden, there's an awful lot of room to make some money. And all of a sudden, that risk is minimalized. And all of a sudden, with that first reversal bar, it's damn near non-existent. Now, this is a pattern that repeats itself, guys, every day. I don't care if it's crude oil. I don't care if it's NASDAQ. Doesn't matter if it's gold. That one's from 2021. 2021. Are you making up rules, Karis? Wait for 3 to break fibs or 2 to break other lines? No. Every line is important. See, this is what happens though. Well, let me go back to the picture. Let's check the tape. You ready? That's okay. I'm here to unconfuse you. And the cool thing about this class, and the thing that I love most about this class, is that we will make sure that it's clear before we move on. So if price reaches a line, any line on the large chart, none of my triggers get past the line, Karis, that's a textbook termination. That is absolutely no trades into the area. Are you good with that one? I love this. This happens a lot. Now, if 2 triggers get through with momentum, I can say, yeah, it's got the potential to break. But when we talk about the KISS plan that I give you, Karis, and it's up to you whether or not you want to follow it. In order to optimize your chances of success, the first thing that it says before you ever even get to your checklist is let there be 3 trigger lines through. Because 3 trigger lines, not 2, is the highest chance for breakout success. Does that make sense? And I think what I said that may have confused you is there's a lot of you that are still going to take it with 2 triggers. That's your right, guys. I'm not the trade police. But my job is to have the best chance of success. My job is to trade the patterns that I can prove win more than they lose, that give me an edge. Why wouldn't I? This is my money. 4 is always the best. 3 is pretty good, but needs to be managed assertively. 2 has a boxer's chance, guys. It might sneak one in every now and then, but it's probably going to lose more than it wins if patterns are any history. So we're learning the pattern. There it is in 2021. There it is in 2022. It's just a pattern. And if we go to the market, and I love the market, that one probably didn't give us an entry, but let's take a look. 3 triggers through, all the momentum from a strong top. I circled the tail because the tail is the fight and the pullback. I want to not open that, but rather open this or this, get there eventually. And I want to scroll back and look at that tail. There it was. And holy smokes, it pulled right back to an area right inside of triggers and gave the opportunity to make some money. So do you see it, Karis? First, it's momentum, 3 triggers through, pull back to the area, moonwalk. This is what we're teaching. This is exactly what we're looking for. And it does repeat quite a bit. And remember, that's just the best of the best. Like, that's the most awesome trade. And because of FOMC, I have to go back to yesterday. But does everybody see? There's momentum and path, right? Let's make it huge. It's okay. Here, let me show you my favorite picture. Most of the people know what's coming up. And Moonwalk, I'm in the same boat that you were. I had to come into these rules blind. Never knew anything about the market. No, we don't say slow. You're a little special, right? But here it is. That's all of us on day one. That's all of us. We're drinking from a fire hose, right? And we are just learning language. We're learning what the hell does he mean when he says trigger line, right? What's he talking about when he says an area? And Moonwalk, here's my promise to you. Okay? And on day 3, I'm going to check back in with you. By day 3, if you don't worry about getting rich, and I know you said if I can make money in 6 days, you're not going to make money in 6 days. You're laying a foundation. You're learning how I teach. You're learning that the patterns work, and then you're going to commit to learning those patterns. And that's just a realistic talk. I'm not in sales. I'm in making sure that you can find success. This gets easier and easier. And by about day 3, you start to see this pattern. I like that. I like that. On this one, Karis, or this one, or the one that we did. Hold on, I know which one you're talking about. This one right here. All right. So Karis, I'm going to say it again. And we'll just do it this way. Here's your area for retracement, right? The very simple plans say that's where your stop goes. I, Karis, am under no obligation to take this trade if I'm uncomfortable with the risk needed to put my stop in the right spot. That's it. And it's funny. Here, I'll give you the picture. And it's funny, Karis, because the first thing that we relinquish as day traders is our right to do nothing. That is the first thing that day traders let go of, is the power that if you don't like the risk, you don't have to take the trade. Now, Karis, I'm going to give you a way to circumvent that huge risk. You could wait for a reversal bar down, and then the KISS plan says redefine where the market shouldn't go. And now you've got less risk. And you have a trade that's already confirming the direction, right? So I'm a problem solver. But we all forget that. I'm under no obligation to take this trade. I don't have to. The futures markets trade billions with a buh every day, guys. If I don't like the way a trade feels, I don't take it. If I don't like the look, I don't take it. If it doesn't reach my area, I don't take it. And that is one of the most liberating feelings that you'll ever have as a day trader, when you realize that your methodology is so kick-ass, is so good, is so powerful, is so consistent, that when you get that little simple look, boom, Boaz took that one. I think Jen took that one too. When there's momentum and nothing in the way, pulls right back to an area inside of triggers. And guys, that's what we're learning right now, is one, we're really learning when not to trade. Do you guys see it? Welcome to FOMC day. Term to term to term to term to term to term. That's about $2,000 worth of avoidable losses if you got bored, if you got antsy, if you tried to predict, right? I do have momentum. I don't have a clear path. Hell, I even have an area inside of triggers. If I take this trade, it's not a high probability trade. It's a medium probability trade. It's a trade that would have to be managed assertively in order to really get the most out of it. So I'm going to back up, and Moonwalk, I want to address what you said about being a little confused. The goal for everyone, and Karis, I want you on board with this, and the rest of you that might even be struggling, I want you to really consider this. If I look at my charts, and I don't say how much money can I make, or I don't say I hope it's a winner. If I look at my charts and I go through this methodically, I have momentum, I see strong triggers. My path is clear, price has not reached one of those lines. I can define my entry. And if you do it individually, well, that creates the highest probability trend trade ever, guys. That's the trade that you can prove without question. Go back the way we just did it. Circle those tails, right? And you can prove that's your bread and butter. But because you learned these three concepts individually, because you can pick them out of a lineup quickly, when one of them goes away, you get into what we call medium probability. And I love medium probability. High probability means that each indicator on every chart agrees with the rules for the trade. Best of the best, guys. Shiny gold things. Medium probability means that most of your indicators line up with the rules for the trade. However, a small issue, singular, exists. One of your three core have gone away. Well, I can still take this trade. I just need to manage it a little more assertively. And I'm going to say it again. This will be the majority of your trades. So you've got two different scenarios, and it doesn't just have to be momentum. Maybe your clear path is gone, that 50-50 trade. I'm going to lean on momentum and entry. Maybe my entry area isn't perfect, but I have momentum and path. Hell, maybe I'll wait for a reversal bar to confirm that move. But when you know what's working for you and against you, and that's what I teach in this room, it allows you to make good decisions, not only on your entry, but how assertively you may need to manage it. And then this is the one that none of us can seem to ignore. When I don't have momentum, when my path isn't clear, when 2/3 of the good stuff are gone, I want you to say this is low probability. And then if you choose to take it, that's on you, right? You manage that hyper assertively. Holy crap, 66% of the good stuff is gone. I'm going to take it anyway. It sounds silly if you say it like that. So that's Ninja Trader. And that's the core of why we teach the way we do. So for you guys that are brand new, we're teaching the process of reading indicators so that you can make amazing decisions using this awesome software. And now we're going to go to TradingView. And I know some of you are in here, you don't have T3 indicators, you're in the funding company, and you're like, I'm tired of blowing out evaluations. Guess what? I'm about to give you the keys to the kingdom, but you're going to have to sign up for that demo and get a hold of this software. Probably going to cost you a little money, worth every penny. Worth every penny. It's an investment in your trading business. Only 3 rules to do what we do on this chart. First trade, guys. Only 3 rules. We're in TradingView now. The rules are a little different. The looks are a little different. We only have 2 charts. There's a 15-minute chart. That's huge. I can get a lot done. I can get a lot done in 15 minutes. So, Karis, this is one of the new things. You have been gone for a while. John and Melinda have opened Nexgen Pro Trader funding. And guys, we are a funding company. And I'm not going to lie, we are the best funding company. We're still new, but we have the best drawdowns out there, guys. It's not trailing drawdowns. It's closed equity drawdowns. 1 day pass. And right now they're running a promo where it's 90% off evaluations. And then when you pass your evaluation using this freaking awesome plan, should that be the case, they're going to credit what you pay for that activation right to your fee. You need TradingView for this one, though. You can't do it on NinjaTrader. 2 charts, big crowd, little crowd. 15 minutes first, defining direction, momentum, key targets, and terminations. 1 minute, defining the immediate strength of the market and defining entry points. Showing you the big picture, showing you the fight and where it's most likely to fail, guys. That's all it is. It's the exact same concept. We're going to use triggers. Large chart only has small triggers. How easy is that? Cyan, they're up. White, they're down. But if you can't tell the difference between up and down, let's do a private session. Get you squared away on that. Your small chart will have both small and large triggers, guys. So the second trade on the plan that I give you for TradingView, and yeah, it's designed to optimize your chances of success, is what we call a momentum trade. And a momentum trade is going to be dependent on what you understand from the trend trade. But a momentum trade requires that separation between small and large. And if it's not there, you can't take the trade. So it's important that you learn that look or remember it from our talks in NinjaTrader. TradingView has areas. What are areas? Give me an adjective. What do you guys think? How could I describe a horizontal line on one of my charts? Some would say bouncy. Some would say, I know about them before the market ever gets there, and I fully understand that they can create a bounce. If you don't believe that yet, there's a good chance you're struggling trading into areas. Support or resistance, they can cause bounces, Chris. So one of the things, you weren't here for every time I introduce new people to the software, I say areas are bouncy. That's it, because they can stop trends on the large chart. They can define entries on the small chart. So if you just believe they're bouncy, you're less likely to trade into them. Man, sniffing pills, I don't give trading advice. You got to take the moves that fit your plan. Now, if you have the indicators, there's a plan for TradingView. Oh, once you pass your eval, pay your activation fee, go to semi-live, trade consistently, get paid, take all the Nexgen Pro Trader Funding's money. The templates, Gixam. Instructions. As soon as you qualify for it, 8 days is, you have to trade for 8 days. So sniffing pills also, here, watch this. Boom. Everything that you need to know, all of the instructions. And man, I'm not kicking you out of my room. Please understand that. I'm not kicking you out of my room right now. But I am going to give you that link. And that's the prop firm chat. And man, every question you have about the prop firm, you'll get the answers over there. The Autobot will jump in and answer everything. And you'll probably find it quicker. Not trying to run you off. Hang out. And then Gixam, so from here, hold on, let me get you a more specific link. Right here. Are you using Chart Prime? The supply and demand zones? But either of these links work. If you don't have the indicators provided or loaded, they just won't work. But there you go. All you have to do is click on a link. It'll open it up for you. Come over here and click copy and save it. Make copy. And it'll get you everything that you need. And then, of course, instructions right below as well. Instructions right below. All right, guys. You're welcome. Let's define a trend trade. What does a trend trade mean? It means that we have defined a trend, whether it is up or down. It means that we patiently waited for that fight, and it means that we're hoping it resumes the trend. That's it. That's the whole methodology, guys. This trend trade that we're about to talk about in here is the exact same trend trade that was on Nexgen's plan in 2004. 2004, trade number one was let a trend get established, wait for the fight, get in on the good side of triggers, and try to get to the next area. What I'm teaching is absolutely nothing new. It's just easier than it used to be. So a trend trade starts with defining the trend, and then your large chart, your big chart, the large crowd can't be trading directly into areas, room to targets, clear paths. Such an important concept, even more so on these 15-minute and 1 minute. Congratulations, sniffing pills. I giggle every time I say that. Guys, your 1 minute chart, not trading directly into areas. Areas are bouncy. You've got to have room to get to where you're going. And then finally, it's that magic phrase, buy or sell a pullback in an area on the 1 minute chart, on the small chart. But this one, we're going to get to the weak side of the triggers. There's a little look for entry that's going to keep you from fighting the immediate strength of the market. So let's go through it. Let's break them down individually. First, we have to define the trend. Up or down, right? Up or down. Let's keep it that simple, that black and white. If the small triggers on your large chart are going up, I'm only looking for rules to be met for long trades according to the KISS plan. If the small triggers on the large chart are going down, I'm only looking for rules to be met for shorts according to the KISS plan. Now, guys, one of the things that I did, and this goes back to my right brain remedial self, is on TradingView, I stripped away the large triggers. You don't need them on the large chart. It's just too slow and it creates noise. And we've gotten rid of the background colors because it just creates opinion, guys. They're either up or they're down. Fewest moving parts. Rule number one says from wherever you're going to enter your trade, make sure you have room to make money. Make sure that your large chart is not trading directly into an outer band, a 1-to-1, a mid band. Make sure it's not trading directly into a zone or a divergence high or low. Make sure it's not trading into something that could create a bounce. Give yourself room to make money. That's rule number one. It's a pretty easy rule to learn. Rule number two says that from wherever you're taking your entry, have room to make money. Make sure there's room for you to get to your targets before your targets can create a bounce. Now, everybody has a different idea on how much room is enough room. And I'm going to go through why I think it's important to consider it like this. Some of you will do it with $40 worth of room. And $40 worth of room requires lightning fast reactions in order to, that's not even a word, lightning fast reactions, because it's going to get there fast. And if that area screws up your good time, you're going to have to be super quick on the trigger to protect your investment. Now, I'm pretty darn good at reading my indicators and reacting fast. I require for my own personal trading plan at least $100 worth of room. And this even tests me. Because if you're trading a market that's moving, it gets there fast, guys. You've got to be ready to react. A lot of my new users like to keep it a little bigger in the beginning as they learn their patterns. You'll have to decide what works best for you. If we find ourselves taking trades in the room, we'll use that $100 rule. And now here is the fight. Guys, this is your entry pattern, and it is the exact same pattern every time. So would be a long trade, which means that the small triggers on the large chart are going up. And it means that there's room to targets on the large chart. The first two advantages are in play. Now, rule number 3 says that we are going to wait for the fight before we enter. Your fight begins not with a reversal bar. This is a little different. Your fight begins when the small triggers on the 1-minute chart turn down. And once those small triggers turn down, you can instantly say, I know that I need to buy the pullback at an area. Well, there's an area, and there's an area, and there's an area, and there's an area. Which one is it going to be? Hell, I don't know. So the second half of the phrase, guys, gets you in at the right spot. As I pull back to support, my rules say I need an up bar that closes on the correct side of the triggers, the weak side of the triggers, above the small triggers. And I don't get it, which means I've got to wait for the next area. And when I get to the next area, so moonwalk, remember areas are going to be horizontal lines that run across your chart. And they're all different. So this right here is an area of support and resistance. These are called 1-to-1s, and that's a midband. And any of these can create a bounce. So what you're doing is you're chucking a tennis ball as hard as you can down. That's the fight. And when it reaches one of these areas could create a bounce to send us back in the direction of all the large chart stuff. Does that make sense? Cool. So on TradingView, there's a little safeguard for you guys. And what it says is that when price reaches that area, we don't just jump in because the small triggers are the immediate strength. So the entry rules say that you must get an up bar, a reversal bar up, and both corners of that bar need to finish above those small triggers. And this is what we call the weak side of the small triggers, because it's the weak side of the small triggers where reversals tend to happen. And when I've got an area to support it, that's where the market is most likely to get back in line with all your large chart advantages. So it could blow through 15 areas before you finally get an entry. But since you know exactly where it has to come from and you know exactly what you have to see, you're going to learn to sit on your hands a little bit, to relax, to just wait, to say there is no pressure. It's either going to present or not. And that's your right, is to wait. So again, it's just a pattern. When the small triggers are up on the large chart, I make the decision, because I'm following the KISS plan, to only look for long trades. When I have room to target, this is what sends me to the small chart. If I can't say room to targets, I refuse to look at a small chart. The pullback begins when the small triggers roll. And guys, I want you to annotate your charts like this. Because the small triggers rolled down, my rules say wait for a pullback to an area with a close on the correct side of those small triggers. Learn that phrase. Because the second this happens, you're going to draw a box down here and say that's where they have to go. And when they get there, you're going to say they have to give me an up bar that finishes above the triggers. That's my entry. And guys, that's where the small chart reverses back in the direction of the large chart advantages. And it's going to look the same, go in both directions. First, the triggers are down, and then there's room to trouble. And because the small triggers roll up, I'm already looking at higher areas, and I don't know if it's going to be a midband or a zone or 1-to-1s or this zone. Hell, I don't know. But I do know that my rules say take a down bar that finishes below those small triggers so that I'm not fighting that immediate strength of the small triggers. And sure enough, that's where more often than not, it tends to reverse and go in the direction of the trade. And now I've had you guys tell me, and from my own personal trading, this trend trade, when the rules are met, when there's room to targets, is somewhere in that 75% range, give or take. That's what you guys are showing me. Great entries create manageable trades. Good morning, Miss Trina. So management's where the money is made, guys. If you have the NinjaTrader KISS plan, it gives you a very specific way to manage your entry. If you're in the TradingView plan or the NinjaTrader 50/50, it gives you a very specific way to manage that particular trade. If you're in TradingView, your management starts with understanding where the most current price on the large chart is in relationship to those small triggers that define trend. And there's only three options, whether the market is up or down. It's either left, it's either right, or it's inside. Just 1, 2, 3. If you are left of the small triggers, you are on the strong side of the small triggers. There's that word again. And this is where 1-minute areas are most likely to break. This is typically where we see the bigger moves on that large chart. Not guaranteed, but typically. This is where I may hold for that bigger move. Now, if I'm on the right side of the triggers, this is the weak side of the triggers. That's the side we're waiting for to enter the reversal to go with the direction. This is where problems can happen. Now, I'm still looking for long trades because on a 15-minute chart, I can go from weak to strong in one bar. I'm still looking for long trades with the trend, but 1-minute areas are most likely to bounce. This is where room to targets pays dividends, because this is the look where a lot of you are just going to go ahead and get paid right at that area and wait for the next trade. That'll depend on your personal management preferences. Now, if I'm inside of those triggers, I'm in the transition side of those triggers, guys. This is where splitting targets makes sense. This is where getting paid at the first sign of trouble, because it's not hard to go from transition to weak. But maybe you say it's also not hard to go from transition to strong and reach that next area. I'll protect my investment. I'll get a little bit in the bank. And if it runs, outstanding. And if it doesn't, I refuse to lose. That's your right. But if you learn this right here, you'll know exactly how you're managing the trade before you ever enter the trade. And that's my first hour. And it's a little bit longer because I know I've got new people in here and I really wanted to make sure that we did it. One of the things is it's the first hour every day. So if you are brand new and you really want to keep it simple and you want to just latch on to the idea that you don't have to think too much to make things happen, there's the first hour right there. I recorded it, I think, right before a holiday. It's just a 101 class. No worries. No worries. Moonwalk, I love what I do. You're going to realize that the more time you spend in this room. And you're going to realize that we really are. We're a company that's focused on you. And we have been for 30 years. That's why we're still here. Some people are, Karis. Some people are looking at NinjaTrader, and then they're glancing at TradingView, and some people are doing it. And some people can and some people can't. I tend, personally, just myself, to get a little bit confused when I look at two, and I personally will latch on to whichever chart gets me into a trade. Some people can withstand that. And then do you see the gap theory? Price reached Fibonacci, price reached a mid-band. Those large triggers are a full bar away. And sure enough, they are sucking back to those triggers as we speak, as I live and breathe. Which means that if you decided to go long into a termination from mid-band, you are in for a world of regret. Because down it goes. Pretty cool, right? How did I know that was going to happen? Because I'm freaking awesome. Not really. And when it's not a termination condition that pushes it back up very often, it means the sellers were looking for that next level. Not guaranteed. They'll make decisions probably at these triggers. But we'll see. We'll come back and look and see if they get to 7,005. So are there any questions about momentum, about path, about entry? Guys, I really do. I say the same thing every day to try to put you in a position to make good decisions. I give you the rules. Every day. I hand you the trading plan. Every day. I give you the spreadsheet. Every day. So in the first hour, when we started, I said, I will give you everything you need to be successful with this software. And now it's up to you. Now it's up to you to find the courage to post in the room, to say, Mark, I'm brand new at this. It's okay to be brand new at this. This is what I saw on NinjaTrader. This is what I thought of the momentum. This is how I felt about the path. This is where I took my entry and why. Did I do it right? And guys, you get a private session with me just like that. And if you're on TradingView, it's no different. Hey, Mark, this is the direction of the trend. This is where it was, so I know how to manage it. I did have room to targets, and then I decided to write on my chart. My small triggers rolled up, so I needed an area and a close below. And I don't know if you noticed, Mark, but I'm making money on the easiest trade ever. And once you learn these very basic trades, the door opens. And you're going to see a lot of people in this room doing things that are not high probability. Don't be the trade police. Don't put that burden on yourself, guys. Remember that we all stay in our own lane and we all go at our own pace. But simulation and practice is the way to get there. So before I take my break, and I'll only take one break today because we have a butt ton of pictures to look at, which I love. I want to read something to you guys, especially my new users. Pay attention. Bear with me for just a second. This was a response to an email sent to me by a gentleman that was mad as hell that everybody in this room would have the audacity to take trades that weren't high probability trend trades. This is why I say don't be the trade police, guys. The key to everything that we do with the software is building a foundation, understanding the basics, and then compounding, growing just a little bit every day. There's a Japanese philosophy called Kaizen, and it says be 1% better every day. That's what I embrace it. I liked it so much I went and got it tattooed on me. So for you new users, I will blanket you with very conservative rules. Moonwalk, it's going to feel like I'm stifling your progress, but I'm not. I'm enhancing it. We talk about the recognition of advantages, knowing what you're up against, and a solid plan is handed to you because it optimizes the chances of success as you learn to read your indicators. And there's this cool concept, guys, that confidence comes from the memory of success. So think about your first day on the job and how scary it was and overwhelming it was. And I would be willing to say that wherever you are in your professional career now, it's almost effortless, right? Repetition gets you there. So for you new users, all termination conditions are to be considered bad. And for you new users, no momentum is bad. And for you new users, areas beyond large triggers are bad. These are blanket rules because they increase the likelihood of success. I want you to succeed because when you feel that taste of success, you begin to desire it. They're not always bad, but until you have the experience to know when to use exceptions, guys, it's just safer that way. And just like anything, the more time you spend with it, the more you're going to see. This opens doors for you. Do you have TradingView, Karis? Cool. So take your TradingView ID and send it to Jason in Tech, and he'll get you the indicators. We don't just leave them lying around. We've spent hundreds of thousands of dollars to create those. You gotta get them from us. So guys, learn the process that yields results. That is one of my favorite phrases. I've got a lot of favorite phrases because it's just a matter of process. The pattern is a process. The rules coming together is a process. And the more you stick to the process, the results seem to follow. That's where the KISS plan comes in, guys. If you can keep it that basic and follow simple rules, and you're okay not looking for all the trades, only the best trades, you can find an extraordinary level of success. And if we asked everyone in the room, who found an extraordinary level of success following the simple plan? My hand goes up because I know that it's true and I know that it works and you can do it. And then if I ask the same question, who screwed up all that success by abandoning the plan because they're so damn smart? Boom, there's my hand again. That's what happens. That's what happens. So, guys, focus on being successful with the easy stuff. There's so much more to come. The longer or the further you deviate from the basics, the longer it takes to get to where you want to be. Right now, a lot of you feel attacked. Sorry about that. Question everything. I can't stress this enough. Don't ever sit in my room wondering, I wonder what that means. I wonder what that is. I wonder why he said that. Guys, be super vocal. This room works when it's a conversation, not a lecture. I want you to learn, but give yourself a little grace. You are new. It's okay to be new. Nobody was building bridges when they were a freshman in college. So you're all freshmen in college. That was a really long first hour. I get it. It was an hour and a half. Most of the classroom is probably, oh, look at that. The gap theory worked. I'll be damned. The rest of the classroom is probably going to be going through pictures. You guys went gangbusters on me today. I love it. There is no maximum amount of pictures. One of the things that you can do for me, and I hope your ears are on, you know who you are. Guys, I don't need 7 pictures, 3 pictures, 5 pictures, start to finish. When you post in the room, show me your entry and your exit and not necessarily everything in between. And when we get these classes where there's just picture after picture after picture, which is my favorite kind of class, we don't have to stifle through and say, oh, I wonder what happened next. Complete trades annotated with the whys will get you the absolute best feedback. Just a heads up. And I'm clicking through links, guys, and look how many pictures are in there already, and we're not even close. And the cool thing is, there is no limit. If you have a question, post it. Guys, if you just want to show me how big it is and brag, that's okay too. Just type brag pick on there so I don't break down a trade you don't want feedback on over and over. And I do ask that you identify momentum, path, and entry because this is a room. New users, you're going to see a lot of different trades. I will go back to momentum, path, and entry on every chart posted so you can see how it was or was not there. Man, we've got a lot of pictures today. I love this. Dun, 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 dun. Still going. You guys are awesome. Let's keep doing this. Ta-da! Look at that. Whew. And guys, just a heads up, the record is 77, still held by Wayne. I love it. That was such a good day because Wayne called me on it. I said, man, you can't post too much. And he said, all right. I got a lot of questions. He was learning the software. That was such a great day. And I think everybody walked away smarter. Let's just get on it. Breaks are for sissies. Unless you guys need a break. Wayne does a great job of analysis. So check it out. The trend is down. He's on the strong side of the triggers at 65 here. And he's got room to trouble. So he sees support. Support, support, support. Support finally breaks. Full bar below. When it does, Wayne uses the momentum of the small chart to sell a pullback here. And it's money all the way down. $850 single trade. Nicely done. Wayne, the patience of letting that area break was awesome. And guys, if you're on TradingView, until you get a full body of a bar below trouble, it is still trouble. So awesome, awesome patience. And I love how you did that. Support, there's the break, becomes resistance. Triggers are down. There's your mid band. There's the break below. And he got it with 1 second left. I do it too, Wayne. At 1 second, it's hard for things to change. So support turns into resistance. And Wayne says, hell yeah, let's go down with the large chart advantages. And it looks like it's doing all right. And there was his entry. And you got stopped out at $60. Which to me says you might have moved stops a little quick. If you lost money on that trade, I don't see where you did. Oh, over here. Over here you did. Did it hit anything? It didn't hit anything, did it? It just turned on you. Buttheads. And then you click sell when the bar closed and you're back in short. That happens, guys. And Wayne, I posted in the room, man. I was watching gold last night, and I don't know what it looked like on TradingView, but on Renko bars, it looked like FOMC. It was so fast. It was untradeable. It was so untradeable that I found myself staring at it for 20 minutes. There's the short. Ugh, hit and didn't fill. And this is where, Wayne, and guys, this is one thing. If you have an area where you want to get paid, if you can see where the market is likely to go and they hit you and don't fill you, it's okay to cover your ass. It's okay to get break even on that trade because a lot of times they got to where they were going. You finally got paid. Still a little risk on the trade because lots of room. And one thing that I would say is that that outer band has a really good chance of acting as support, Wayne, especially when you're outside of it. Anything you do short is going to be more difficult as long as you're outside. So keep an eyes on that outer band. But there's a good example. They're trying to push. $10K, if you're on Apex, you should have your Tradeovate or Rhythmic open so that you can close your position from the web. If you don't, you might be in trouble. Are you Tradeovate? Tradeovate has a kill it all now button. So does Rhythmic, whichever one you're using. I will not trade. Oh, yeah, unfortunately, there's nothing I can do. If Tradeovate is stuck, I would try refreshing. On NinjaTrader, you could try go into positions and close position, flatten everything, see if that works. So I'm rooting for you. And then Wayne, just the idea, and this is just one of those things, all the shorts make sense and they're really good. You can see the level that they're struggling with and there's nothing there on the chart. But anytime I'm outside of the outer bands, I'm just a little more heads up. So I love that you got paid. Didn't really give any back. Nice job. And look at that. Outer band. Looks like a momentum trade entry point with the smalls above large, but no room to target, so you stayed out. Great breaks. I don't have anywhere to go. I choose not to take it. Guys, that's what mature traders do. And then the trend is down. It is transition. It looks like you may have traded directly into the outer band, but look at that. There's your pullback right to the area. There's your close below. Get in on the next bar. And now we're hoping for some down movement, right? We got to hope that outer band. Hoping to that outer band. Guys, Tradeovate is jacked up for everybody right now. I don't tell you how to trade and I don't give trading advice, but if my data platform is having challenges, it does not behoove me to try to take live trades with said broken data platform. Just saying. Wayne, perfect trend trade entry. We're going to see if the outer band became problematic. And no, maybe not. I don't know where your entry was. There was your entry. Outer band did create a bounce. Illogical stop placement. Not where the market shouldn't go. So you get back in. And they're headed down. And then they pull up. And then they're headed down. Went even money when it was 80%. Got stopped out. Just exhausted, right? I'm done. I'm done. I can't get this market to run. I'm not going to risk money. Nothing wrong with that. Guys, the winners tend to run fast. This is what I remember from last night. Everything cranking up, strong side, odds favorable, pull back to the 1-to-1s, easy money. 3 contracts, boom, 104 ticks. That is the psychosis of gold. And Wayne, you used the perfect momentum trade to capitalize on that psychosis. 104 ticks, guys. That's like $1,040. 3 contracts. Now, Wayne, I noticed that you blacked out your entries and exits. I noticed you blacked out your entries and exits. I see everything. Why? You don't even have to tell me why. Don't even worry about it. Everything says up. Pulls back to support. Closes above. 43 tick trend trade. Nicely done. 65 tick trend trade. Is this historical, Wayne? Because why on earth would you exit right there at 65 ticks? Right? And Wayne, I'm not saying that you're doing this. 10K, you've got to go through trade of 8. I'm not saying that you're doing this, Wayne. But when I look at a historical, why would you exit there? With everything cranking up. Wayne, would you really take a 65 tick exit? Hell no, you wouldn't. You'd be looking for that outer band. Your stop would have been behind this bar, the second one in the breakout. I know this because I know your plan. So what happens, guys, is when you go historical, lean on your rules. That's not an exit, right? That's an entry. That's an exit. That makes sense. Arbitrarily jumping out with momentum in the middle of nowhere is just not what you do. So it looks good historical. It's fun to go back. Look at all the money I could have made, but make sure that your rules are met. Triggers are down. Pull back to the area. You trade directly into a mid band and a VWAP, and look at how much money I could make breaking my rules. The same thing, Wayne. I won't take that momentum trade because there is no room. But now you'll take it here because it's historical and get excited about 118 ticks. These are the things that we look out for. So Moonwalk, when I say historical, if I open up a chart and I scroll back, anything not now is historical. And one of the challenges that I see with people, and I don't accuse people of this because that's not my job. I'm not the trade police. But this hurts you guys long term. If I'm going back historical, Moonwalk, and I say, oh, look at this. The market pulled right back to an area and it closed below. And the rules are so freaking broken, it hurts. But your brain will say, look at how much money I made all the way down to the bottom tick. And right here, your brain says that you have ovaries of steel, when the reality is your rules were never met. It's not a trade. The giant stop doesn't make sense. And when you go back historically and you're looking for these patterns, make sure that you lean on your rules. Make sure you're not going back to see what you could make. You're going back to see if your rules were met, to see if it is in fact the pattern, to see if the edge was there. And I'm certainly not accusing you of doing that, Wayne. I know that you have a solid pattern. But when you tell me you won't break this rule and then 6 slides later you break it beautifully, looking at historical, I think that maybe you're not leaning on the rules, but rather what happened after you think there was an area. Oh no, 10K. So when you do historical study, Moonwalk, and you will do historical study, you'll go back and you're like, oh, let's see. I had those, right? I had those. What I used to do, because I'm so awesome, is I would say, man, I just went long at support and I made all the money up to this pink line. And because I knew that pink line was going to hold, I made all the money back to the blue line. And because I knew the blue line was going to hold, I went long again and I stopped out just right before the pink line. And then I went short because, of course, that's where it's going down. And then I didn't think that blue line was going to hold. So I exited right there at the low tick. And I knew that it was going to reverse up. So I took it up. And then at resistance, I said, oh, man, I know it's going down. And I'm still short. And I look brilliant, right? Whew, not one rule met. But because I can see what happens, I can convince myself that there was a butt ton of money to be made there. And the reality is there was a butt ton of money to be lost there. Does that make sense? And again, I'm not the trade police. You guys do you. But if I see it, I will point it out. Trend up, strong side of the triggers, room to targets, not a close above because you're trading directly into resistance, right? Here's where it breaks the zone. Here's where it pulls away from the zone. Here's where it pulls back to the zone, even right there. And with all the triggers going up, Wayne says, I can't fight. I can't fight triggers that are in my direction. So he gets into the trade and takes it right to his target. I love that. Guys, why do we wait for the close above? So that we're not fighting the immediate strength. If the immediate strength is going in the direction of your trade, you can't fight it. And Chris, historical is back testing if you let it be. It's back testing if you're looking to see if your rules were met. It's cherry picking if you're trying to inflate your sense of self-worth, saying that you would have been in moves that had nothing to do with your plan. I like it, Wayne. Let it break, pull back. Everything says up. Let's go up with it. That's solid. That's solid. Everything is up. Room to targets. No area to trade from. Didn't close above the triggers. Made 13 ticks. Congratulations. I don't have a trade here. I'm not sure what you saw to get you into the trade. You entered above the triggers, but if it went down, you were still on the wrong side of the triggers, right? So guys, I'm not afraid to say you might have pulled one over on the market. And Wayne, you might have pulled one over on the market. You broke rule 3. You did have rules 1 and 2. So maybe you just made a judgment call. Trend is up. Weak side of the triggers. Room to target. Here we had an area inside. And then when you get in at 32, not waiting for the close, hits the HVA. That was the one that you did before. And then it comes down. Everything says up. And we're pulling back. And we hit the 1-to-1s. And it closes above. And man, they slipped you because they were cranking. And now just let's go. Let's go with that trend. Let's go with that direction. Let's go from that area. I would lose this trade 1,000 times. And you did. That was a good trade. That was a rules-based trade, 100%, and it just didn't go. That's it. Just didn't go. Fit the rules. As you guys are on simulator, your job is to take everything that fits the rules. Everything that fits the rules. I'm sorry, Moonwalk. You said, yeah, kind of. Did it not make sense on the historical? I apologize. I didn't see that in time. I don't want to miss out on something. And I'll show you what I mean. So if my rules say, no, it's okay. You're not slow. It's day 1. So if my rules say, I must first have momentum, separation between the small and large. This is at 10:15 this morning, so this would be considered historical. What I'm doing is I'm going back to see if my rules are good. I'm going back to see if I can prove that my rules win more than they lose. And we do this to build confidence. So the perfect trade, and we will always take a digression from the chart reads to make sure that the lessons come out. If the perfect trade is those three concepts, momentum, path, and entry. And I'm going to sound like a broken record. You're going to hear me in your sleep. Momentum, path, and entry. Your significant other is going to be like, seriously, you keep talking about clear paths in your sleep. So momentum is separation between the small and large when all the colors match. So this is the bar that we're talking about right here. Let me make a bigger arrow. Boo. This is where I would be looking for my rules met. So I have momentum, and this is how you're going to be able to do historical study. You can put a circle around it, whatever you want. Price has not reached an area. All of my triggers are below the previous area. So moonwalk, this is the perfect large chart. It has both strong triggers as well as a clear path. Does that make sense? Probably not completely, but that's your first two rules coming from one bar on a large chart. And here, let's do this. And what that's going to look like, in the heat of battle, it's going to look just like that. Momentum and path. Perfect. And then rule number 3, moonwalk, and this is my favorite rule because it's so easy to define once you learn the phrase. Rule number 3 says I will sell a pullback at an area inside of triggers. And now here's my triggers, but none of my bouncy things are inside. Can you see that? There's my trigger lines, large, but the areas are above it already, not at all inside. So rule number 3 is not met. And you can see that the market continued up. And this is one of the ways you can go back and study. Now, what a lot of people will do, moonwalk, is they'll look at the trade and they'll say, well, I entered at this mid-band because I knew the mid-band would hold. And I put my stop all the way up here in a completely different pasture on a different ranch because I knew those one-to-ones would hold. And then I took my exit right there at the low tick because I knew those triggers would hold. And moonwalk, it's absolute bullshit. You don't know. So when you go back and you're looking for those rules to be met, it's really important that you lean on the rules. And that's kind of what we were saying. It's too easy to say what you would have done, right? Because you can see the outcome. But with momentum and with room to trouble, if I get a pullback to an area inside of triggers, that's the only way my rules are met. And that's exactly what it will look like in a large market, in a live market. And the only thing that I'm not in control of is whether or not these bars come up and get my entry. So leaning on the rules, embracing the rules, demanding that the rules are met, even when you're going back doing historical study, it'll pay dividends moving forward. If you're teaching people CPR on Recessa Annie and they do it all wrong, but you tell them they're doing it right, they run the risk of killing someone later in life. Price is way below triggers. Trend is up. My wife would say the same thing. You're probably like my wife. She's like, you're going to break ribs, right? If you're doing it right, it's uncomfortable. Trading is the same way. Selling a pullback in an area when it looks like the market is going down is uncomfortable until you get good at it. Triggers are up, weak side, pull back to the area, close above, fits the rules 100%, just didn't work. And then it pulls back to the triggers and you decide to take your money on the way down with momentum, get it back. Nice little apology there. Nice little apology there. Triggers are up, strong side, room to trouble, breaks above, pulls back to support, and then there's that giddy up. Almost closed above. You get in when it's actually above, and it goes fast. So fast that it can't even produce a bar. That's awesome. Everything is up. Jump the fudge in. You guys are going to see this a lot. I have momentum on both charts and nothing in the way. I'm just going to jump the fudge in. See if they hit the next area. Nubis, I don't make recommendations. So the first question that I would ask, are you trying to trade the KISS plan? Are you trying to take the most basic approach to finding success with the software, learning to read the indicators without a lot of distractions? And I guess the second question is, what platform are you on? Are you on NinjaTrader or TradingView? But either way, if you're on TradingView, NinjaTrader, cool. So in the KISS plan, Nubis, it doesn't reference market flow anywhere. You just don't need it. You just don't need it yet. But when you get really comfortable with these great trades, there are ways to incorporate it later. So while I don't give trading advice, I will say without hesitation, as a brand new user, it's going to prove to be more of a distraction than a blessing. Everything is down. Transition, room to trouble, pulls back to the area, closes below, and down it goes. And then Paul, I like that you let it break below, which makes this into resistance. And your entry just, it does everything that it was supposed to do. Nicely done. Large chart still good. Strong trending market. Jump the fudge in. Make some money, get out. When it pulls back, get in with confirmation because it's the wrong side of the triggers. Get out at trouble. Nice trading, Pete. Karis, there's your strong trending market, train tracks. Guys, when you see JTFI, that means jump the fudge in, but they're not saying fudge. This is based on a market that's cranking. Quick profits make sense. And you'll find that most of the people that take that trade get paid around $100. GTFO, wait for the next one. This trade took an extraordinary amount of patience. Weak top, triggers rolled, down, odds favorable momentum. Gap theory, Pete, do you see it? Price reaches the fib, the mid band, large triggers are a full bar away. Guys, if you take that trade on the gap theory, it's probably going to those synthetics. That's a lot of heartache you don't need. This is where that reversal bar is freaking awesome. And down it goes right to the fib as advertised. Good job, Pete. That's the cool thing. Pete says, I see it now. I see it now. Guys, you don't always see it in the moment. But here's what makes this class great, I think. And it's not me. I know I wish it was, but it's not. If you didn't see this in the moment, we'll talk about it, right? We'll talk about it. Hey, Pete, let's go back with no stress. Check out the gap theory. And then Pete's going to say, oh, crap, I fought the gap theory. And what that means for long term, moving forward, is that now when Pete's taken a trend trade right up into that termination condition of mid-band, he's going to ask himself, where are my large triggers? Is it gap? And he's going to be less likely to get in here, and he'll probably wait for the gap to be closed. And that's all it is. I'm not, damn it, Pete, why'd you do that? It's like that's a huge amount of risk against the gap theory, especially into a termination. 2 terminations from a weak top. And I'm going to say you pulled one over on the man, Pete. Good job. Then it comes back, retests, everything's down, and you do get paid on it. Nicely done. That's going to give me heartache and heartburn. 15 up, weak side, clear path. Pulls back to the area, closes above the triggers. There's your entry right there, Paul. Straight up to where it should go, and second profit target. Trade not entered. Trade not entered. So this is where we say, hell yeah, that's the perfect entry. But Paul, from the weak side of the triggers, in a real world scenario, would you really hold through that mid-band from the weak side for your first profit target? Because if you're following the very basic plan, the mid-band's got to be the first target, right? So guys, when you go back, don't use your pumper, make it bigger, right? Try and keep it as realistic as possible. Try to keep it as true to your plan as possible, because we're creating expectations based on patterns. And if you falsify them, you're going to start thinking things are supposed to happen because you saw what happened. 15-minute is trying to come down, pull back to the area, close above, out at trouble. That's what I'm talking about, Paul. Oh man, have fun with the Daytona. Wayne, thank you for posting as much as you did. And the sentiment goes both ways. I learn a lot about different patterns that I don't think about, and I also think I learn a lot about how to better give you feedback, because I start to get into what I know you're thinking, and I think it's a good combination, right? Good job. Nice job. See, Paul? That's the Paul I know. I see trouble. Let's get paid. Let's make money. It's not perfect. Life is good. So really nice. And it's good to see it live. Good to see it live. Great job. 15-minute long transition. Clear path to the 1-to-1s. Pulls back to the area. Closes above the triggers. You take an entry. And you get out at trouble. And it looks like you let it run just a little bit more. You get out on the way to trouble, $200. What a great round number. Second contract's off at trouble. That's a beautiful trade. That's perfect. That fits everything. Nicely done, Paul. Who was it yesterday that said, oh my gosh, it's not hard when you wait? Someone posted it in the room. Is TV just on NASDAQ mostly, or other fast markets? Karis, I have people that trade NASDAQ, gold, S&P. A 15-minute bar is always a 15-minute bar. And a 1-minute bar is always a 1-minute bar. And the difference between the two platforms is, look at that. You get one bar in 15 minutes that is 60 points long. So it's just different. This might have been, oh my gosh, this might have been 75 bars on a Renko chart. It's just a different look, and that's why the rules are a little different. Some people really like the way that you have to wait for a close on the correct side of the triggers. Keeps them from getting jumpy. Some people prefer that they just take the close at the area inside of triggers. And guys, that one fooled you into thinking it was going to win, and then it didn't. But 3 divergences in the same price range should have kept you out of that trade. Play with both of them, Karis, and just kind of figure out what speaks to you. Yeah, so the dynamic Renko bars are based on ticks, and then the other one is based on time. So it creates a very different look. And that's why we have the subtle differences. Moonwalk, it's the same concept on either. Everybody has a preference. I do most of my personal trading on NinjaTrader. Let me see if I can find the pictures I made. And if you really want the secret to success moonwalk, I have 20,000 pictures. The more pictures you take and annotate, the more times you describe what you're seeing, the faster you're going to get to where you want to be. And more importantly, the more losers you post in my room, and I know that sounds scary, but the more times you post a loser, the faster you're going to get to where you're going to be. John Novak, who happens to be my big brother, the CEO, has been teaching people for nearly 30 years. And he says that the one constant, the one thing that he can say with zero hesitation is that the people that post losers in the room are the people that 6 months later seem to be posting nothing but winners because they're learning how to avoid the losers. But here we go right here. So TradingViewer Ninja Trader, it's always the trend, it's always the fight, and it's always looking for the resumption, and it's always the trend, and it's always the fight, and it's always looking for resumption. So just pick whichever one makes you smile. That's like the best I could say is if you feel better looking at one over the other, go with that one. And I got you. I got your back on either one. I see a short. So you're looking at Wayne's charts, okay. So that would have been a trend trade, absolutely. And then I'm not sure what the short is. Trend trade up, triggers up, weak side, manage assertively, room to targets, pull back to the area, close above, great stop placement, and they just zoomed right up to profits. Nicely done. There we go. There's John's 2 cents. Entered by accident, lucky 230. I love that. There's nothing better than accidental wins. Anything you want, Nubis. Trade what makes you happy, guys. We've had people that all they traded, Chris T, it's Tradeovate today. They've been sending out updates, so if you have Tradeovate, you're struggling today. But absolutely. Nubis, we've had people hedging their soybean crops using the software. I've had people using it on feeder cattle. So whatever makes you happy. It's just patterns. The market doesn't know what it is. Yeah, for sure. I'm not sure, Chris. You could try resetting, repairing. But Sergio's not having any problems on Sim with Ninja Trader. All right. Let's see what we have, Victor. Trend trade. Trend is up at the time. Cool. 1288, 13. So you've got a little bit, maybe a fraction of room to the outer band. Is that right? $10K, take a couple pictures. Take a couple pictures of your trade, of your entry, of profits reached. Have those on hand when you go talk to them. All right, Victor. So $340 loss on lead account, 600 receiving account. That is how fast the candle moved. It was a good trend trade that just didn't happen. Don't know what caused that spike down. So let's see. Your outer band was around 14, 15, Victor. Is that your long trade right there directly into the outer band? And then that one loses. And then you take the next one directly into an HVA and resistance and an outer band. and that one loses dramatically. So if I have to say Victor, you could say it was a good trend trade. I could say you broke the first two rules. Looking at this chart, you traded into the outer band on the large chart, and you traded directly into that area on the small chart, which means rules 1 and 2 weren't met. Does that make sense? You see the zone, right? And I don't know if the zone was there, but the mid band was. The mid band was absolutely there. Just no room to go. Guys, a tick above something is not a break. And that one is right into the zone as well. So 2 trades directly into areas, Victor, and then they believed in that area, and they went down fast. Take care, 10K. Do you not see the red zone behind it? You've got an area of resistance. You've got a supply and demand zone, even behind the HVA. But if rule number 1 isn't met, right? If there's nowhere to go on the large chart, and you're in transition, and there's nowhere to go here, sometimes it's better just to sit on your hands. And look at that, outer band held, and then that's where it held again. Large chart room to targets, I would say, is the main culprit on that one. Which you've been doing, nothing else to do. What is that? Sitting on your hands? Go play golf. I mean, it's FOMC, guys. Triggers up. Momentum is there. It is the gap theory. There's your pullback to the area inside of triggers. Quick profits because the gap theory. So, Pete, 2 for 2, brother. Great quick management. Great quick management. All right, Miss Adriana, potential to break. Divergence from a 1-to-1 on the potential to break is going to kill that thing so quick. Going to kill that thing so quick. We talked about that earlier, though. Guys, when it's only the potential, especially from a weak top and divergence prints, this trade is more likely to lose than win. A weak top is bad. Divergence is bad. It's okay. Demand a reversal bar, something to give you at least a hint of an edge on those. And then Adriana, without momentum, no separation between the small and large. It just didn't have the giddy up. And there it is again, divergence again, right from those 1-to-1s. And it pushes up. And it's been a difficult day this morning, guys. Every FOMC day is like this. I've never seen one that isn't. But gosh, we hate to sit still. And then John says, check it out, guys. Everything says down. I got room to trouble. It pulls back to an area. I close below, just like my favorite brother taught me. And let's see if it goes down. John Novak, the perfect trend trade. Pretty cool when the CEO shows up with a trend trade that follows the exact same rules that have been taught all morning. There might be something to it. We worked hard on this one. Just like us, doing battle. Triggers are up. Not quite a zone broke. That was. And then it pulls back. Zone broke, but not quite triggers. Triggers don't define it over here. Would have been here for 34 ticks. Did make the next zone. Didn't fit my risk-reward plan, not my money. So focused on the trend trade, you missed the momentum entry. I hope it closed on the good side, 10K. Back to support. Never gives a close above. So guys, when you post in the room and you're not taking trades, go to your rules. I don't know where this is on this chart. I don't know if you're looking for shorts. I don't know if you were thinking longs. It looks like a short directly into trouble. Rule number 2 not met, and it saves your bacon. So that's good. But go through those rules. Show me which direction you're going or not going. Trend down, transition, room to targets. Victor, price pulls back to the area. There's your close below. And it just didn't go. Just didn't go. You followed the rules, Victor. Just didn't go. That's it. No, you're okay. You don't have to repost it. We figured it out. I'm just saying in general, if it's a no trade, write the rules, right? Hey, I was going to go short. The triggers are down. This is it. Because what you're doing is you're going through your big picture, your big analysis. Good job, 10K. Let me know how we can be helpful. Jump the fudge in, add on it goes. I think we already saw that one, Wayne. Nothing to do here while they are duking it out. I love that. Can't go short, can't go long. Guys, look at the small chart. What an absolute blessing to know where the problem areas are and have rules to keep you from trading into them. A lot of posts without annotations. Awesome, Chris. Weak bottom, triggers are up. Tail into momentum. Maybe it's this one right here. Oh, nope, it was right here. Losing momentum. Jumping in without momentum, Pete. And sure enough, it retraces back to the area. You sit through it. You're able to make it. Good job. Fib holding. Sitting on hands. Boaz. Sometimes it does not move much in pre-market. No trading for you. I love it, guys. I love the pictures where you guys say, the market won't give me what I demand. I'm going to do nothing. And for those of you that don't realize just how brilliant you are to say things like that, congratulations. You really are. Strong trending, clear path, snapback. Didn't wait for the snapback. That's okay. Off it goes. Nice job, Pete. I think we talked about that one earlier. Boaz, it finally breaks out. All the momentum, clear path, pulls back to the area right at the bottom of the triggers. You get in on the way up. Good stop placement, keeps you safe. Money all the way up. That's awesome, Boaz. Great trade. Patience paid off. Went from they won't give me what I need to they gave me what I demand. And sure enough, it paid dividends. Great job, Boaz. And then going the other way. Momentum, path. That was the perfect entry, and you jumped in 3 days late. So I don't know if you got slipped, but you were already in, and it just, I mean, man, it's hard to manage a trade that puts you in that low. And guys, when the market's cranking, slippage is a real thing, especially on the NASDAQ on Rinco. It was a good look on that large chart. And there it is again. All the momentum, potential to break, pull back to the area, in with confirmation. Easy money. There's the pattern. There's the pattern. So you guys that are new and feeling a little overwhelmed, you're going to notice how often we look at a chart and we say momentum, and how often you're going to hear me say clear path. And those are the concepts that I really want you to latch onto. Direction is down. Strong side of the triggers. From 46, you do have room to trouble. Area of support becomes resistance. They pull back to that resistance and close below. And you say, give me my money. And that's a quick $300. Phil, that's you, right? Really nice. Is this little lesson really helping you guys? The idea that if you just wait for a full bar, if you just wait for a full bar, it changes the whole dynamic. So for you trading view people, it takes out the ambiguity. It really does. It keeps you focused. Guys, an area of support is always support until the full body of a bar breaks below it, and then support becomes resistance. So when you're looking for a short trade, you don't get head faked by these little prairie dog looking peak outs. You actually get to trade from resistance. That's a great example of that. 3 triggers up, everything going, no divergence, perfect entry, and Boaz says, I missed it. It's just not my money. Not, dang it, I missed it. The market owes me. Oh, I can't believe I didn't get it. Life is horrible. It just, I wasn't there. It's not my money. My money's coming later. Great job, Boaz. Good job keeping the emotions out. Guys, it can't be your money if you're not there. Finally got an ES trade-off. Strong top, triggers roll, odds favorable momentum. And I love these. These always make me laugh. Pete, you know why. Because Pete took his first trade directly into 95 levels of holy crap. And he took it. And new users will say, well, he traded into a termination condition. So I'm going to introduce you guys to the bar fight. A termination that reverses the market is a huge advantage. Trading with the trend is a huge advantage. Trading with momentum is a huge advantage. No divergence on the pullback is a huge advantage. Strong triggers on the pullback is a huge advantage. Clearly defined entry, small stop, both huge advantages. So Pete walked into the bar with 16 drunken football players and picked a fight with the captain of the chess club. And he won it this time. Every now and then the captain of the chess club is going to whip your ass. But he had so many things going for him, and he has so much experience with the software that he chose to take it and manage it. And actually, you lost it. And then he gets back in when everything breaks and the path is clear. Damn it, Pete. I did so much talking you up, and I didn't realize that you chickened out of it. But guys, that's one of the things that'll happen. You'll have to make the decision on whether or not to enter that trade. And Pete did. Whoops. Get small again. Triggers down. Momentum. Room to targets. Triggers roll. Resistance didn't break. It did. There's your full bar. Right there, Papa. Do you see it? Yeah. I read it. Did you see it where it broke, Papa? Which means that when you took that one, that was the trade. That's that one right there. And then just boom, that was perfect. And look at how it danced until you got that bar. Pretty cool, right? You didn't have the clear path, so you took the small loser. Papa, it's the perfect read. It's that one little thing that you missed that changes everything. Good job, dude. Ooh, I know this is Miss Trina. Triggers are up. Strong side of the triggers. Room to target. Dun, dun, dun. Market pulls back to the areas. You take the prairie dog close above because you are trading from support. You are trading from a mid-band. And you say with this perfect look, I like it. Out at trouble. You were pulling your entry down to white HVR and it got you in. So just a quick little blap blap. Nice job. Nice job. Late entry on a trend trade. Down, room to targets, pulls back to the area, closes below the area. The first area gives it a bounce, but stops keep you in. And down it goes. Nicely done, Miss Trina. Good looking trend trade. Why don't we trade directly into areas? Because areas can create a bounce, right? And they did. But you trusted the overall picture. That's hard to do sometimes. Nicely done. All right. Termination condition. Smalls above. HVA trade. Out at trouble. That's a good looking HVA. Starts with the termination. You guys remember when I told you when you learn the concept of termination conditions, there are trades to go the other way? It's called an HVA trade. Nicely done, Phil. You've done a lot of study on that trade, and it's paying off. 15 down. Transition. Clear path to the VWAP. Paul, you just jump in, right? Oh, no, you're back here. Close below. Sorry, I missed it. That's your profit target. Great job on stops. Getting paid. Nicely done, Paul. Is that Paul? That's Paul, right? Those are your lines. Great entry. Awesome trade. Nicely done. Nicely done. Wow, we made it through the first round of pictures. Now I have to figure out where we stopped. I told you guys the second half was going to be all pictures. You guys flooded my room. I absolutely love it. Do this every day. Do this every day, and you'll be floored at how quickly you end up where it is you want to be. All right, here comes the next round. Not quite as many. That's all right. Dun, dun, dun. John again. Z Robot, Boaz, Pablo. And a nice recovery trade. Nice. All right. Hey, if you guys are new, so Moonwalk, this is a gift for you. I want to do this before I get into the next round of pictures so I don't forget. This is a document called Trend Trade Simple. And I sat down with John and Chris Novak, and we said, what is the fewest moving parts where somebody could have a document to walk them through the trend trade? So what I did on this is, first it tells you how I teach and what I teach. Momentum, clear path, and then entry. And it reminds you that these are the core, the first two concepts. Thank you for that. And then it goes through, and this is kind of cool. And this is what I like. This is one document. Hang out and play with it. The first picture tells you the rules for a trade so that you can get the verbiage down. The second picture shows you exactly where to find them, so you know where your rules are met. And then as it goes down, it gives you the indicators. What's a trigger? What's an area? And then it breaks it down individually, the advantage of momentum, and it talks a little bit about it because I like to talk. And then it gives you a picture of strong triggers. And then how to define that clear path. It tells you exactly what can be a termination, how to define a termination, what a strong top or bottom is, which will come in for the second trade, pictures of support and resistance breaking, and also that patience, reminding you that you don't have to be in every move. And then finally, the entry advantage coming through. And this talks you through it. And this is pretty cool. As you learn the pattern, it literally goes from before the reversal bar and what you'll do, how to define the areas that qualify, where to put your order, and then huzzah, you're in. And all that is done on that document as well. And then finally it goes through how to study, where you can scroll back on NinjaTrader and circle those tails and compare it to the pictures of what an entry looks like and what momentum looks like, and kind of burn that into your mind. So I wanted to get you that before I forgot, because the closer you embrace that document, the easier this is going to be for you, because it really does take a lot of the news out. I just dropped it above your head. Here we go. I'll do it again. Whoops. So now it's right below you. So give you a little peekaboo here. Uh-oh. So what you can do is you can literally click on it and drag it over to your desktop, or you could download it and get it in your downloads folder, and then you'll just have it. And then guys, when you have questions, I can't stress this enough. When you have questions, when a concept isn't clear, just ask. You can DM me here in Discord if you need to. My email works, and guys, I'm not at all shy to answer emails. As long as I'm at the computer, I will. I won't ignore you. So take advantage of the educational resource. So triggers are down. Transition. It is resistance. Accidentally added a sell instead of exiting first contract. Close for decent profit after the mistake. It's just a short trade that went right where it's supposed to. It's tight. Good job. You entered at the HVA though, at 30. So Phil, HVA trades. No term. Was there a termination on the large chart? 32. There was. So are you using the pullback to these 1-to-1s? Smalls below HVA. That's like a short little HVA. Nicely done. I like that. That took me a second. In Moonwalk, you're going to find out that this is a really welcoming room. Everybody's in here doing the same thing. You were treating it as a momentum trade off of the HVA. So what about, I guess it's still resistance, huh? Right on. I like it. I like it. Little unorthodox, but good stuff. All right, Aaron. Entry pullback was the mid band, but ended up being outside of the triggers. But you did make money, right? Appreciate that, Karis. So you broke a rule and you got paid. But Aaron, here's the cool thing. Is you recognize that you broke the rule. I try to be. I've got 2 kids. So Aaron, where did your stop go? If you got in where the market shouldn't go, how big did your stop have to be? It had to be at least $150 a contract. All right, so you picked an arbitrary stop placement and just hope it didn't get hit. Right on. I mean, that's your right. So Aaron, this is where I ask, and man, I'm not busting chops here. Does entering on the wrong side of the triggers work out for you more than it does not? Just don't even answer it in the room. Answer it to yourself. And when you answer it, ask yourself, do you really need that trade to be successful? Do you really need to hope things hold to be successful? Do you really need to make up stop placement numbers to be successful? Phil will answer it for you. It doesn't. So Aaron, you do whatever makes you happy. But one of the things that happens, man, if you're hell-bent on breaking the rule of rule number 3 because the large chart's perfect, and the large chart was perfect, a reversal bar at least gives you something to put a stop behind. Does that make sense, Aaron? It doesn't guarantee a winner, but it at least gives you some place that makes sense, someplace logical to put the stop. Woo, that's a long time. Cool. So rest up, Moonwalk. Holler if you need me. And relax. And thanks for being a nurse. Some of my favorite people are nurses. Sorry, and I just kind of said that, but you didn't. My apologies. Go relax. and I'll see you tomorrow morning. I don't know how you guys do that. My son works overnight. I would sleep like a baby. My mother-in-law was an L&D nurse, worked overnights. I would never survive. I fall asleep on the couch at 7 o'clock. So thank you for being here. I'm excited to have you here. This is going to be a lot of fun. And we'll see you tomorrow. Rest up. Three triggers through. All the momentum. You tried the jump in, right, Boaz? And it didn't work. Dang it. That's about the best look ever for the jump in. And it just turns into a trend trade. So you add on. I love it. And it does everything a trend trade should. If you guys jump in, it's funny how it's always the bar you jump in on that reverses, right? But because you understand the rules, you know what this look is likely to turn into, and you don't panic. I love that. That's confidence in the methodology, Boaz. Good job. And this is Phil. When I follow the rules for the trend trade, 75%. Now, Phil, I would have to say you're taking counter trend trades. You're adding momentum trades in there. But 75% doesn't suck. You bet, Karis. What's your question? And draw the box? Sure, for sure. I love it when you guys ask me to do this. All right, so everything starts. So Karis, I can't not go through the whole thing, right? There's this bar. Here we go. What do you think? The momentum is there, right? I want you to see how, I want you guys to get in the habit of doing this every time. No, see, you're getting ahead of me. Let's just talk momentum. Let's keep it easy. And guys, take that picture that I just put in there, print it out and put it on your desktop. Take 3 pieces of paper and do what I'm about to do. So the momentum is there. Yes. And then now we get there. 3 triggers through, right? Is that a clear path, Karis? This 1-to-1 is who you'll date in 5 years. Don't be afraid. If price doesn't reach an area, this is where language comes in. An area is only a termination condition if price reaches it, which means, Karis, these 1-to-1s are a target if I get an entry. Does that make sense? Until price reaches the area, it has no bearing on my life. It's a line in the distance. It's a red light 3 miles away that I have no desire to slow down for. That's where I'm hoping to go. Does that make sense? But do you see how price did in fact reach this line? Which means this is our line to count triggers on. Does all that make sense? Hey Kevin, welcome to the room. Cool, I love it. So watch what happens though. No, you're good. Yeah, to the target. So the market's trading like right here when Boaz decides to jump in. But look at what happens after he jumps in. The rules say, hold on, we got to do this though. I didn't answer the question. Is it a clear path with 3 triggers through? It's imperative that you know this answer so you know what kind of trade you're getting into, so you know what the rules are for entry. And you said 3 triggers through earlier, right? No. Clear path has nothing to do with that. If price reaches a line, let's go back to the cool picture. Hold on, let me get there. So when I say a clear path, this is awesome. Thank you for this. When I say a clear path, what I'm saying is, we'll use this picture. It means, so clear path is in reference to termination conditions. So anytime we say a clear path, we're saying that price has not reached an area. But what we're also saying, and I'll draw a fictitious fib. We'll make that resistance. What we're also saying is that all 4 triggers have cleared the previous area. So clear path means that I don't have trouble above or below. And clear path is going to look like this. Hold on, almost there. Almost there. We'll use this one for reference. I haven't reached the area, and I'm free and clear of the previous area. So my path is clear to get to the next trouble area. Does that make sense? All my triggers are above resistance. My path is clear to the next thing that could create a bounce. And now what we run into, and I love this because this is one of those lessons I didn't know that I needed to talk about, is every time price reaches a line, I count triggers. So on this particular line, first it was a termination, then it was the potential to break, then it was a better potential to break, and then finally it becomes a clear path, and this fib goes to the rearview mirror. Does that make sense? And when we finally get that clear path, damn it, there's the termination. There's the 2 trigger potential to break. There's the 3 trigger potential to break. So at the time of the trade, see how I don't have the clear path yet? So what I would be doing is if I took a trade here, I am trading the potential of that area to break, which means that it's not high probability, but rather medium probability, which means that I may manage it just a little more assertively. Does that make sense? That was such an awesome question. And then the entry rules say that I'm going to buy or I'm going to sell a pullback at an area inside of triggers. So Karis, the reversal bar begins the pullback. And you can see that Boaz just jumped in. He's like, man, I hope they don't go without me. Here's your trigger lines. That's where the retracement is most likely to go. That midband and that fib are where the market is most likely to bounce as it pulls back up. And it does pull up to the higher one, and it never gets out of the triggers, and Boaz catches it on the way back down. And you're thinking to yourself, but Mark, dang it, Mark, he traded directly into a blue line. Do you see it? Yep, the bottom of the box, so your retracement zone goes from the top line of the triggers to the bottom line of the triggers. So as those split, that retracement zone gets bigger and bigger as it's going. See how it continues to grow as they split away from one another? But at the time of the trade, that was kind of your window. And the reason he's cool taking that one into the blue fib is because his large chart told him with the trigger lines, that blue fib's got the potential to break. So Boaz is looking for the next line as a target. That's a lot to take in. Does it make sense though? And then once it hits those pink 1-to-1s, we're right back to termination. And then it's 3 triggers through, but without the momentum. And then it's 4 triggers through. And if we hit another line, we'll go right back to termination. We'll go right back to termination. Pretty cool, right? I'm telling you guys, When you speak up in the room, this class gets better and better. Gets better and better. Triggers down, momentum, clear path, pull back to resistance, price close below, set stop loss at the HVA line, and you got stopped out. At 10:45, let's go look. Where was that one? Was this it up here? I want to try and line it up. Somewhere between 26,181, 26,181. So that was your close below. Right there. All right, Papa, are you with me? And you had an area there. So I'm going to do this because we know that you had the area there. That was your pullback to the area. So I'm going to create a fictitious area because yours is no longer there. So the trend is down, right? And Papa, here's your fight. Make that one smaller so you can see it. And that top of that bar, right there, that's where the buyers failed. Does that make sense? Your stop goes above their failure point, and I want you to see what happens. The sellers take back over, right? And then the buyers go, oh, but we wanted to fight. But they couldn't get back to their failure point. Your stop is still safe, and sure enough, they cruise all the way down to the outer band, right where we expect a trend trade to go. So when you're placing stops, you have to remember that concept. We're entering because the buyers lost their fight. And because we can see that high pivot, we know where they lost their fight. And what we're saying is they may come back and retest it. So I'm going to put my stop just a little bit above it. And then if they can get back above that point where they previously lost, I'll exit my trade. And look at how they didn't. Not until all the way over here. And then once they get above it, they go back up to the next area. And then there's your next trend trade with a new failure and a new stop placement. And that one all the way down to where we would expect it to go. And then it creates the bounce right to the mid band. There's the close below, but it was super tight, but it still went exactly where we would expect it to go. And then it breaks, support becomes resistance. They pull back, you get a close below at 44.25, and sure enough, the market goes exactly where we'd expect it to go. Pretty cool, right? And they never take out that failure point in a trade that wins. So you have the ability to have some pretty solid stops in place based not on what you're willing to win or lose, but rather where the market shouldn't go because they've already failed. Does that make sense? That's the second half. You've got the methodology for entry, great. And now we start talking about how to manage it, how to protect ourselves. Momentum, room to trouble. Made a mistake. I thought I canceled my order after the second divergence printed. Switched tabs here. Order filled the third divergence. Had a moment to close out up 100. I hoped wrongly it was going to continue down. On 2 contracts was about $100 loss. So did you enter after the third divergence printed though, Aaron? Not on purpose? Right on. So good save. You lost a little bit. You lost a little bit. See how that circle? I don't know if, when, or where. Easy way to lose that trade. Actually, that would be no momentum. That was, didn't give you an entry, didn't give you an entry, and then finally they fizzled out. So good job catching that. That's always scary when you hear it. You have slowly crashed 68 trades. Man, Z-Robot, 68 trades. And the only thing you ever show me is the occasional winner. There's probably some great lessons in there. Could you imagine learning to fly a plane, but your instructor sits in an office on the ground while you're up there and you're just hoping you get that shit right? Oh, we even talked about this one. Everything is down, room to trouble, pulls back to an area, closes below. First sign of trouble, little bit of a bounce, no panic. Boom, boom. Oh, that was John Novak. John Novak, nice trade. Great job, 10K. The old spike test to the triggers, which usually happens. Stop on the other side of it all, above market flow signal. Hold and wait. And bingo. Right to Fibonacci support, right to the zone. Beautiful trade. Pretty cool, right, guys? The CEO of the company, the man that wrote the indicators, takes the exact same trades we teach every day. Pablo, did I miss one of yours? Momentum, room to target, pull back to the area inside of triggers. All right, whose trade was this? Good lesson here. Nathan, is that you? No, you took the same one. Cav. Whose chart was this? Help me out. Oh, Pablo, I think I'm just not there yet. Boaz, this is you. 3 divergences in the same price range is an exit condition, no matter how sexy this chart is. So that third divergence was a great indication that this trade wasn't going anymore. And sure enough, it didn't. So good job getting out of there and not losing any money. Boaz, 2 triggers through, weak top, 2 divergences, pulls back to the area. I can make a case either way. Boaz, it's easy to say, hey, look, it went down. I should have taken that trade, right? Historically, you can say, man, why didn't I take that trade? Well, did you lose the long here? No, because it's not perfect. And if this would have went up, Boaz, you might have shown me the same picture that broke all of your rules. And look what happened. And you've got to lean on, were my rules met? And Boaz, I know you well enough to know that a weak top, 2 triggers, 2 divergences, and huge freaking stops typically isn't your trade. But it sure feels like you could have made a lot of money, right? That's the worst. That just wasn't your money. Pablo, triggers down, weak side, all the room. Unbelievable patience all the way back. Out at trouble. 84 to 78. Great trade, Pablo. That's okay. Testicular fortitude comes with time. Did you see John's notes on how he managed that one? Very often they will spike up to those large triggers, so he kept his stop beyond because this chart was giving him everything he needed. That takes time in the saddle, man. I don't have the clackers that my brother has. He has so much confidence in his moves to get to targets that he'll hold through that. So great job, dude. Do you realize that this week you're, I think, 4 for 4 on perfect trend trades? Is it showing in the results? 8 for 8 with last week. So it's showing in the results, that patience? Good. Congratulations, dude. It's hard to get over that hurdle sometimes. Triggers down, all the momentum, pull back to the area inside of triggers, just perfect trade. Z-Robot, that's you, right? Textbook beautiful. Textbook beautiful. Man, you guys are keeping me busy today. I sure do appreciate it. Miss Trina, let's see if I can get to the bottom of the list with you guys. It's already noon. How cool is that? When's the last time you guys kept me so stinking busy? We did nothing but pictures till noon. That's awesome. All right, Miss Trina. Same trade as everybody else. Oh, you almost made it. Look at that. Target. And then it gets to the low, and you're like, if it breaks, awesome. And if it doesn't, they can have my money. I love that, Trina. Smashes through, and you're like, they're either going or they're not, but I'm not giving a lot back. Great management. Great job getting paid. What a beautiful trend trade. All of you guys that took that one. Solid, solid stuff. Triggers down. Jump in directly into trouble, get paid. Have 34, 35. It looks like you jumped in at 37, which means you had about a point to get to trouble. Probably not the recipe for the highest level of success, trading directly into large chart areas, but it worked this time. All right, so Nathan, 3 divergences, true. Yeah, they're definitely close enough. Wait for confirmation. So Nathan, what are you confirming? That your rules aren't met? Your rules are no longer met. Rule number 2 is no longer met. That doesn't magically change with a reversal bar. Large chart's great. Small chart will show you the change that you can't see on the large chart. You can do whatever you want. No. So 3 divergences is completely different than 2 divergences, isn't it? 2 divergences says, hey, there might be a push. If you get a reversal bar, awesome. 3 divergences, hold it, let me go to the instructions. I'm mad that you guys made me realize there was instructions. I try not to read these things. Have you guys just thumbed through this and looked at it? 3 divergences, guys, in the same price range as a termination condition. So let's take it one step further. When do I not take a trade? Into a termination condition. Good question, Nathan. If you chose to take the trade, that's your right to do it. It's your right to trade directly into a termination condition, but is it going to win more than it loses? I'm still confused on price hasn't reached a termination because of how red-blue fib location on charts can vary slightly. They don't vary. They don't vary. They're the exact same number, Nathan, but they're different bar structure. So your triggers are going to be different. Your bars are going to look different. This is bigger. This is smaller. But the number is the number. The number is 100% the number. Does that make sense? No, I didn't say that. I didn't say everything is tick accurate. So Nathan, if price, I want to do this right here. I'm just going to put a picture on the picture real quick so I can have a drawing board. If this line is created, and this is your fib. We're going to have fun. If this line is created from 10,000 calculations that put lines in this range, but this was the highest concentration, do you see how it would be okay if price missed it by a tick, right? Or if price overran it by a tick? Fibonacci is a conglomerate of tens of thousands of calculations to create these fib lines. So I need you to be a little flexible, that a tick or two is pretty solid. So what are things that you can look out for when it's only a tick or two? You can look out for things like, hold on. I love this stuff. You can look out for things. Maybe this is a good example. Nope. So let's make this picture. So let's say, Nathan, that right here, price missed by a tick. Cool? What does the divergence tell you when price got one tick away? That the other side is fighting, right? Somebody knows about that number. Somebody got super close to that number. That divergence shows a fight a tick away. Those weak triggers show me that they're losing steam a tick away. That's a pretty good indication that they've gotten to where they want to go. We're losing momentum in multiple fashions. Now let's go back and let's do the other side of that. Let me find a good picture. All right. That's not a good picture. Here we go. This is the perfect picture at 10:02. I love these lessons. Well, you're complicating things a little more than they need to be. So let's say that we're a tick away and the yellow is the fib, right? And Nathan, you're like, man, they're a tick away and I'm nervous. But I noticed that my small chart doesn't have any divergence. So there wasn't that fight from the buyers at that key number. And my small chart has odds favorable momentum. And there's nothing about the small chart that says we're getting a good reaction from that area. This is where you could exercise your right to say, I know that it's close, but my small chart isn't showing me any signs of fight. I'll take that trade. Does that make sense? So when you're at a fib, let your small chart give you some information there. And then in regards to three divergences, so what happens is everything is cranking down on the large chart. Whoops, that's not what I wanted to do. Everything is cranking down on the large chart. And I want you to see this. In that range where the three divergences print, 1057. There's like 30 bars over here, but what you're seeing is a large chart that still looks beautiful. But you see the fight, and then you see the fight, and then you see the fight and the weak triggers, and this is the small chart telling you about the change that you can't see on the large chart yet. That's why three divergences in the same price range, that's the deal breaker. Cool. And then two divergences is just the, let me get it. Two divergences is the, hey, I'm testing the waters, right? I'm giving a little push. We want to see, and you'll typically see those two divergences as you begin to get closer. Here, the buyers say, you know what? Let's see if the sellers really want to go down. And then they stop them a little shorter and they say, let's see if the sellers really want to go down. And that second higher divergence can push way higher if the sellers don't give it all they have. But it's not until three that it's the deal breaker. Man, thank you. You gave me the lesson. Excuse me. I ran out of water. Guys, give me 2 seconds. I'll be right back. And absolutely, Jim, I got you. Give me just 2 seconds. Three hours without a break. So this is I just had to get some water. Aaron, only two triggers through. One day you guys will believe me. But let's do the whole thing. What do the rules say? And everyone in this room, not just Aaron, if you don't take the time to write your rules on the chart, you are absolutely foobarring yourself. What are the rules for the 50-50? Well, let's get them. Let's look at them. Let's take them and let's put them on a chart. My rules say at least 3 triggers through. So I don't have that. My rules say from a strong top or bottom. I don't have that. I do have strong triggers. I do have strong triggers and no divergence. So guys, I'm literally working with 50% of the things that make these trades successful. Yet we're convinced they have to be successful. And then, but that's okay, right? That's your right. So Aaron, now we have to go even further. Now we have to go even further. On your entry, it makes perfect sense, right? If you're committed to this trade, the market, that's your retracement zone. Your stop goes outside of it. As long as you keep putting stops inside of the retracement zone, those stops are likely to get hit and the market doing everything you wanted it to do. That's it. 2 triggers through, not a good look. Weak top, not a good look. Huge amount of risk. All circumventing the risk did is it turned your winner into a loser. You took a chance. And the chance actually worked. It looks like. So guys, write your rules for the trade. Today is FOMC. Yes, 2 o'clock. I won't be streaming it. So screenshots and post in the spreadsheet. Absolutely. Jim, are you using Snagit? Cool. So here's a cool thing. So right here, and just in case you don't have it, there is how to annotate for the best feedback and posting in the spreadsheet right there. So let me drop the spreadsheet in the room again, just so that you have those. And then let me see, because I don't believe those instructions are on the website. So what you're going to do you want to do a quick tutorial to make sure that you can get this done? And then we'll call it a day here. Cool. So let's do this. I'm going to open up Snagit, and I'm just going to take a picture. And then I'm going to share that link. So if you don't have it automatically going to screencast, Jim, you'll want to click on screencast. I set mine to the default. And then I'm going to click share. And what it's going to do is it's going to give me that link on my clipboard. Are you comfortable with that part of it? Cool. So then you're just going to go in, and if you right click into your chart, whoops. Oh, I screwed up. Hold on. I'm just going to paste it in. That's muscle memory. So I've got this screencast app. And there's my link. So I want to turn it into something pretty, Jim. I want to be able to say, oh man, that was a great short or a great long, or this was a loser, or this was a winner. So what I'm going to do is I'm going to come up to the Insert tab. And that's what these instructions are. And I'm going to go to the link button. And when I click the link button, it's going to give me that link again. And I have to paste it a second time into address. So it's just www or HTTPS. And that's the link. And then I'll change this to whatever I want it to say. And then I'll click OK. And now I've got that link. And I can go through and I can study those and come back. And they're there forever because they're in the cloud. And what happens, Jim, after you do that like 3 or 4 times, when you right click, instead of having to just paste the link, it'll default you, or it'll default you straight to the hyperlink. Awesome. Cool. Thank you for asking. I think that's one of the most important parts of studying. So I'm glad that we got that cleared up. And Modifaka, I love that. I have a bad thing to say about Nexgen. You guys pay so quick, makes the other firm seem like ages. It's been 13 hours waiting on a payout, still on another firm. Welcome to Nexgen Pro Trader Funding. We took everything that we didn't like about other firms we had experiences with, not saying anything bad about the firms, but the little things that we didn't care for, and we eliminated them for you guys. So you're welcome.